Good evening. My name is John Matola. I'm the Vice Chair of the Fairfield Board of Finance. Welcome to it's listed as the organizational meeting of the Board of Finance. Today is November 18th, 2025. This is also our quarterly meeting, quarterly review meeting with the agenda. So let's stand and do the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America, to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. We're going to move to item 3. We're going to spend about 30 seconds on this. Item 3 was to hear, consider, and act on the 2025-2026 officers. Apparently under our charter, we're not allowed to do that for our first December meeting. So you're stuck with me tonight to run the meeting as the vice chair. And all my fans out there, if you tune in late or you're listening to this meeting, don't be fearful that I may be the chair moving forward. I'm sure that's going to happen in December. So just wanted to throw that out. So let's move to item number 4. This is to review the current status of the town's pension and OPEB funds. We have as our presenters tonight, RIB Chair and Fire Department Board Vice Chair Ken Lockwood. Ken, see you again. Yep. And we also have Mr. Jeff Barbash. Did I pronounce that correctly? Nice of you to come. And Mr. Barbash is from Black Rock. And for members of our audience, this backup starts on page 1. So I'll turn it over to you. I'm not sure how you want to do this.
I'm going to speak very rare for me, 20 seconds, and I'm going to turn it over to the expert right here and let him talk to you about not just the performance, which is what normally I would come before this board and give a report, and of course answer questions. But I thought it would be, you guys have a new board now, right? Right, 2 new members. Greetings to everyone. Congratulations. Thank you for serving. I was on the board myself in the past. I just think it would be very good for this board and anybody watching to get to know our OCIO, Outsourced Chief Investment Officer, which is BlackRock. BlackRock would be like Radio City Music Hall or something. They're a pretty well-known name, one of the biggest, if not the biggest, financial services company in the world. And we've been extremely pleased with the relationship and the service. And I'm going to really turn this over, let Josh give you a report like I would, meaning on the most recent performance, which thankfully has been pretty good recently, not the last few days. And then let him talk a little bit about what BlackRock does for us, a little bit about his background, the firm's background, the resources, and then open the floor to any questions you would have. And last thing is that I just want to say thank you publicly. Josh did a lot of flying today. He was in Chicago for client meetings and agreed to extend his day and to fly over here to be with us tonight. So, I think it says a little bit about the commitments they have to our account fund. So I'll turn it over to Josh.
But before you go for it, I'd be remiss if I didn't say I want to welcome our new board members too, Bob Elwanger and Dave Rock. Thank you for being here. Look forward to working with you. I should have said that at the beginning of the I apologize.
Thanks.
Turn it back over to you. You're up.
So maybe I'll just, before jumping into the process, I'll just do a very brief introduction about myself, do the performance, and then I can cover a little bit what else we've been covering with the JRIB leadership. My name is Josh Barbash again. I've been at BlackRock for 7 years. At BlackRock that manages whole portfolios, the outsource chief investment office group at BlackRock, primarily focused on pensions, corporate public pension, such as Fairfield. Prior to BlackRock, I was at Russell Investments for a number of years doing very similar work, helping clients understand asset allocation strategy and the implementation. And really before that, I started my career as an actuary. I like to tell clients that I'm a recovering actuary. I was at what is now Willis Towers Watson, but it was Watson Wyatt when I was there doing actuarial work similar to the time everything element to do the pension actuarial evaluations. So I was doing that a number of years ago. So that's just briefly about myself. Again, happy to be here, happy to work with you all to get to know the town, the JRIB, and really just understand the driving force behind why we invest in the people that we pensions. So just very happy to be here. In terms of performance, we'll talk about the first quarter of your fiscal year performance that ended September 30th. So in the packet that you all have, the second page has broad summary of the fiscal year days. The retirement system, as well as the OPEB plans. There's 2 OPEB plans that are combined here. So at the end of September, the assets in the pension system, the retirement system, stood at $525 million. As of the end of October, that number is $500.6 million. So again, a continued strong month of October, but fiscal year to date, this is running from July 1st to September 30th. The pension fund returned a little bit over 5%. Driving factors here, obviously, strong equity markets that continue to rally throughout the summer. On the back of, softer economic data, but something that people were worried about. That stepping cut rates, we saw rate cuts for September and October. That was pretty well telegraphed throughout the summer. So even though inflation started to tick up a little bit towards the end of the summer, with the fact that the Fed was kind of showing signs of softening their stance, to help support some of the labor numbers that were coming through. All in all, what we saw through both Q2 and we've actually seen happen in October and November is corporate earnings have remained extremely strong. So despite the fact that there was a lot of uncertainty around tariffs and trade back in April, a lot of that uncertainty moved out of the market. Extension of tariff deadlines and ultimately a number of trade agreements that the U.S. made with a number of foreign countries. So we saw really strong equity performance. U.S. equities were a driving force up in the third quarter, large cap up 1%, small cap up 12.5%. So when you see small cap start to outperform U.S. large cap, that's where you start to see this broadening out, more confidence in earnings growth and earnings potential within the market. The real driving factor in the equity market is actually emerging markets. Emerging markets were up 12.5% in the quarter. That was again on the back end. We saw both in the U.S. and we saw rallies in China, Taiwan, South Korea's AI macro trade, right? That tech stocks were driving that the economic outcomes, and we saw that with China, Taiwan, South Korea, a number of other countries helping support EM. And the second factor in EM is the continued weakening dollar. So you're unhedged, which the portfolio is unhedged. You see strong performance as the dollar weakens, then returns are strong. So that was actually a really nice tailwind for EM. We've also seen throughout the year, but especially over the summer, rates start to come down, right? As markets start to price in, the Fed was going to cut rates, and the markets were pricing in 2 to 3 cuts for the September through December time, and ultimately getting down to about a longer term Fed rate of about 3%. Right when we started this, we were at 4.75%. So, pricing in 6-7 cuts over the span of a year, that's beneficial to fixed income assets. As rates come down, fixed income prices go up. And so we saw rates move down throughout the summer. And so your fixed income assets, if we look at the fiscal year to date column, the equity assets up almost 7.7%. Fixed income assets up, 1.6% on the quarter. And then the portfolio is also invested in private markets. There's private equity allocation here, which for a number of years has lagged public markets, just on the private equity side here. So 4.25% return on the private equity, and the private real estate at 3.6%. But net total retirement system performance up just under 5.2%. The OPEB plan, that performance is at 6.25%. So the two funds, the retirement system and the OPEB plans, are invested slightly differently. The OPEB funds are slightly more allocated to equities. Part of the rationale for that was the fact that they're less funded pension fund. It's about 84-85% funded. The OPEB plans are in about the low 50s in terms of funded status. And that's pretty typical.
And I just interrupt, that's largely because, not because of performance, but because of, when we started it. That's a more recent phenomenon.
And, the same story will hold here, and we'll go through each of the portfolios, just they hold very similar allocations. The two things that I really want to emphasize, talk about. Number one, the JRIB and the pension has a goal of hitting their requirements. That's 6.9%. Kind of agreed to by both the JRIB, the town, the actuaries, coming up with a reasonable goal to have a long-term return assumptions. How your liabilities are calculated is how the actuary helps determine annual contribution would be. And so the goal of the fund is to meet that return. Trying not to underperform. Obviously, markets are going to do a lot of that annual outcome. But from a fiscal year to date perspective, a really strong start. And over the last couple of years, if you look at the historic performance, the fund has outperformed 6.9% bogey. Second key thing to remember is the portfolio itself is predominantly passively invested. The public markets, it's liquid portfolio is allocated entirely to index funds, U.S. non-U.S. Equity indexes, U.S. non-U.S. fixed income indexes. So no active management in the portfolio outside of the allocation of private funds, which are inherent.
I appreciate that. That's a lot better than I could have done. Are there any questions right now before we go a little further? Yeah.
It's a general question. When the JRIB was, I look at 1 year. I don't really care when the fiscal year. We have to hit budget. You guys seem to be focusing a lot more on the fiscal year today, being in the 5.25%. What we did was be last year, well, or close to 14.5. So, what are you trying to hit our budget number on a yearly basis? Are you looking at the fiscal year?
I think we've had this.
I think we have. I can't exactly.
Yeah, I get it. No, the response is that, it's a bifurcated answer. I mean, obviously, the truth is,
You're looking at 10 years.
10 years, 20 years, 40 years, 100 years. And the big mistake, I think, let me back up. We are both required, and I think it's appropriate for us to come before you guys on a quarterly basis. We go to the RTM on an annual basis. I think it's entirely appropriate that other boards get a chance to look at what we're doing, because we're not an island, right? We're doing something that literally, you could argue, it is the biggest financial thing in the entire town, and probably has the most impact if there was either really great or really bad outcomes. So it's entirely appropriate for us to come and give you these kind of reports and to tell you how we did on a quarterly basis, a fiscal year basis, an annual basis, 5-year basis, any way you want to slice it. But the truth is that, and I see several heads nodding, the truth is that it's really, I think, a big mistake as managers, fiduciaries, stewards of the town's funds, to focus too much on the numbers that you're hearing right now, right? Because the honest truth, I'd love to say that either Josh or myself or anybody on our board did this, right? None of us did this. We have a common sense portfolio. I think reasonably defensible given the risk profile and what we're trying to do in terms of allocation. And the markets have been strong for a period of time. And Josh just gave you all the, headline reasons for it. And there have been periods when the market's not been strong. There have been periods when the markets have been dreadful, like 2008, 2009. The initial part of COVID looked like the world was going to end. There's been many other circumstances like that. And it would be a terrible mistake for us to throw in the towel on whatever long-term strategy we have, because I came to you one quarter and said, I'm really sorry. Last quarter was awful and we lost 7%, right? It wouldn't make you or anybody at the table happy, but it also wouldn't make any sense whatsoever for us to throw everything out that we've tried to do and to try and react to it in some way. So I know it's not really the answer you're looking for.
Yeah.
The answer is we're looking at every single one of those characteristics you look for. We're looking at the last quarter, the last fiscal year, the last month, the last 5 years. All of those are of interest because I think the actuaries use some of that data to help us come up with that discount rate.
We're asking probably questions about it because the only number you're not giving me what the 10-year return is. Because you don't have that, do you?
Sure we do.
Oh, you don't? Okay, because every time I ask for historical data, you tell me that you can't get numbers from one investment advisor to the next. They won't give you their number. And that should be changed. I brought it up before.
Yeah.
That should be written into our contract.
That's a great point. Okay, we should
It
note that. That's a great,
should be.
excellent
like
point.
that. It's our data.
You're 100% right. Right. So to answer that question as best I can, we do have historical data, number one. Number two, BlackRock, to their credit, has done an excellent job of trying to get as much of that data as they can. Admittedly, they had some difficulty with some of our past providers getting everything transferred over. So, and I'd actually prefer Josh to answer this question because it's above my pay grade, which is very low, it's 0 actually. But I do think most of the historical numbers are there for you guys to.
That would be on page 4.
Yes. And they did work very hard to drag some of that.
10 years been 7.53, right?
Correct.
Some of the longer reports help propped up if you look at the one. Certainly the strong equity markets coming out of 2022 has helped the longer term dated, but that long dated return is I think an important part of the performance that the J Group considers as we've started down a path of reviewing strategic asset allocation. Earlier this year, we did a return attribution, so we helped J Group understand kind of what were drivers of historic performance. If you went back to 6/30/2024, if you went back an entire fiscal year, the 5 and 10 year numbers were not as strong as they appear now, just with another strong year. And kind of just try to want to understand what was driving it, were the things that could have been done differently in the past to drive better performance. And we helped dissect a little bit of what the driver was. Some of it was just not being allocated as much to equities and stronger equity markets. Some of those things prospectively are a bit harder to predict. Some of it was the fact that most plan sponsors encountered over diversification in the 2010s. Right, there was this on the market was TINA. There is no alternative to U.S. equities from 2010, but most investors and the best fiduciary approach is to have diversification. You don't want to be all eggs in one basket.
Just to interrupt, I would strongly agree with what he's saying. Probably the biggest drag, if you leave out the Madoff and the Allianz, let's just leave those things aside. The biggest drag for sure has been that and I say we, I've only taken over as chair within the last year, but the board, this board of which I was on and off different times, followed what would clearly be considered the academically proper thing to do, meaning an international diversification, specifically in equities. And for as long as I've been involved in investing, which I'm getting a little older, so it's a while, you've always been told you've got to have investments in emerging markets. You've got to have investments in Europe. You have to have investments in Asia. And for extremely common sense reasons, right? But it's been the biggest loser trade ever, arguably, over the last 30 years. And then, ironically, I'm glad nobody listened to me because I was stomping my feet about whether or not we should have so much exposure to international over the course of this past year. And sure enough, as Josh said, international has now become a decent driver of our performance. So it goes to show you, ironically, that no one, including BlackRock, has any crystal balls on this kind of thing. And it could be that this is a one-year blip, and America, the U.S. again asserts its dominance, and we'd be better off not being diversified that way. But I think we're paid to do what is appropriate and follows a certain amount of best practice. I don't think best practice would be having all your eggs in one basket, no matter how much we all love our own country.
And that raises an interesting question. You and I have spoken at the table about how bad and how long they've been bad.
Yeah.
For like years. And my question was, why are we paying? Because how we have here. And I guess this gets to Josh, because I did hear him say that. So Josh, is your view, which means that countries, is that based on, is that all AI stuff that's shooting up, or is it other industries other than AI related?
There's probably a lot of reasons to be maybe constructive on emerging markets. Say emerging markets as a component of the total portfolio, you're in broad international equities. So about 70% of your international exposure is actually developed with Europe, Japan, the UK versus EM. But certainly from a demographic perspective, take China out of the picture. But you see country, one of the biggest, stronger performance countries in the last 3 years has been India. Broadly maturing population, big investments from the financial sector. Very interesting things happening with fintech. So I think that there's the exposure to various regional opportunities. Being very concentrated in the US limits the overall opportunity set for where this goes. Is it an AI trade that plays out? It might be, and there's certainly pockets of EM that will perform as well, if not potentially better than the US. And so having that diversity exposure allows you to gain that exposure. But it's also possible that the AI trade is not what's going to rally markets, in which case then Europe and a bit more defensive focus, where there's not as big of a tech industry, is actually going to probably would outperform if there was a big pullback in AI. So I think with uncertainty around where this goes over the next 3 to 5 years, the prudent investment choice is to stay diversified. Is it to move and deviate off of the world market equity cap, which is how the portfolio is currently positioned? Is just the world market, the total thoughts of the investors in the world have put a weight of each of these regions, each of these companies to be a certain amount, and just maintaining that and allowing the market to move and having your portfolio move with how the market is moving, the overall world equity market cap. So definitely a prudent way to invest this, unless you really have a view and a stance on a specific region or a specific type of equity that you'd want to actively manage and move in that direction.
So, and we don't. In other words, we're a volunteer board with some guidance from outstanding brains and insights from BlackRock, but we're simply not in a position to be making those kind of calls. Forgive me if you've heard me say this before, it's my favorite expression on something like this. If I were to blindfold one of you and force you to cross I-95 at rush hour and you somehow made it to the other side alive, it doesn't mean it was a good idea. And that would be the equivalent analogy here, right? In other words, we could go all US and, it might end up working, but that doesn't mean it was a good idea. In other words, it's very hard to explain to people who don't, and you're a lawyer, don't do this all day. The performance is not actually the measure. You think it's the measure, but it's actually not the measure that you should judge any portfolio, whether it's your own or an institutional one. The best thing you can do is the best that you can do, creating a diversified portfolio that meets the risk profile and the goals of whatever fund or individual you're working with, right? If you're an advisor and you're helping a 75-year-old couple manage their retirement portfolio, that's going to have a different set of stocks and bonds and so forth than a 25-year-old couple that's just starting out with a long life ahead of them and lots of money being made in their jobs and so forth. And even if the markets do great, it still would have been irresponsible to put that retired couple into all stocks. So it's a long way of saying that we're going to stay the course with what appears to be the wise move, which is to cover the entire world, because we don't know where the performance is going to come from, right? If it turns out it comes from Hong Kong, I'd like to know we have some exposure there. If it turns out it mostly comes from the US, we'll probably do better because we're predominantly US, right?
And I think, Ken, the important point that you hit on the different couples, one of the things that we've worked with the J Rabat over the last several months is thinking about risk tolerance, thinking about return objectives. The long-term goal is to meet that actuarial return, that 6.9. Ken's point, you can build a million different portfolios that could achieve that goal, right? You could be all EM and EM returns 20% for 3 years. You did a great job. But you have to couch your portfolio in what are we willing to give up to get that type of return. And so we look at both annual and long-term volatility measures that the way that the actuarial calculations work is obviously annual volatility. You need to take some risk in the portfolio, achieve the 6.9% target return. Rates aren't high enough that you can do this in an entirely fixed income portfolio. So you do need to allocate to equity assets. And then the question becomes, the more concentrated you become, the more annual drawdown you might withstand. How do we feel about that from a liquidity perspective to meet the benefit payments of the participants? How do we feel about that from impact on town finances? Because a drawdown might mean a high contribution that you need to make. And measuring those short and long-term goals and short and long-term measure generally comes up with moderately diverse portfolio. And to Ken's point, you have equities, broad fixed income. There's a ton of other asset classes you could have invested in over the last 10, 15 years, or you could consider now. But the portfolio as is expected to achieve the goals, has a prudent level of risk that Jared feels comfortable with in achieving those goals. And for the last several years has certainly worked out as the performance of the bond.
One other question, you Ken alluded, the historical number, so the 10-year at 7.5. What data don't you have? That's not in there to this.
No, this is the
You
inception to date.
from your previous investment advisors. We were hearing, well, we're going to get there.
It was a back and forth process with
Okay.
Mercer.
It's improved since I spoke to you.
Okay, so it's okay. So now you feel like you have everything.
So yes,
How
yes.
far back?
So we go back to the inception date is 1999.
Okay,
That's the inception of the fund.
you have everything since then. Great.
You guys have any other
Yeah.
questions?
Any other questions from anybody?
I guess we've always, well, thanks first of all for coming. It's really nice of you to fly from Chicago in a day to do this.
From LA originally.
Well, that's even nicer. Thank you. Thanks a lot. Yeah, we always sort of come back to the same questions, just sort of wondering, what's it look like going forward? And, obviously the difficulty of looking at historical performance is it doesn't tell you where you're going forward. But it's reasonable questions that people have. I'm glad that you mentioned the target liability that we're trying to hit, because that is what I think we should be aiming towards. And I guess probably you guys talk about it in your board, but maybe it'd be helpful for just to bring it here to, to kind of speak to some of Jim's questions, for example, if we just could see some of those risk metrics, because that's stuff what I think would bring to light, okay, well, this is why we think we're perfectly situated in this type of portfolio.
And that is the right question, by the way, because at our last meeting, we didn't take a vote at our last meeting, but we're getting close to it, because for the last year, BlackRock, as part of being relatively new, when did you first come up with us?
June 2020.
Yeah, June of 2020. So they've been doing an educational process, meeting by meeting, going over at each meeting after talking about performance and so forth. We've spent some time educating the rest of the board members about the different asset classes. So we've talked about international equities, domestic equities, fixed income, privates, other stuff that we're not interested in, Bitcoin, whatever it is. And unless you want to, yeah.
No, go ahead, please.
So at the last meeting, which I thought was extremely useful, they presented us with a number of options for how we might want to rejigger the portfolio, including leaving it as it is, because I think Josh will be the first to admit that the way it is not bad at all and could very easily be defensible as is. But they showed us that we could target the 6.9%, but possibly reduce the volatility slightly in order to, and I think that's sort of an answer to what you're asking.
Well, I think that's what we should be trying to do. That's what your board should obviously be trying to do, get the best risk adjusted return is what you're
Exactly.
trying to get.
And that is not something that we can do without their help.
But what I was saying, well, that's great. And of course, that's what we would hire BlackRock to do. I guess what I was saying is even more basic. If just speaking to some of the metrics that inform those decisions is probably, I think what some of us are asking, because all this is just a performance report and sort of a history lesson of what drove the returns. And, frankly, looking at a lot of this modern portfolio theory metrics, that's a history lesson too. But I gather it's probably part of how you calculate your expected return. I'm asking, but and you might have a more proprietary method of forward-looking market expectations, but one way to do it is just looking back and.
Yeah, I mean, BlackRock produces our capital market assumptions. So all of the strategic advice that we give is based on kind of the analysis of our kind of research institute that kind of does all the macro research, thinking about how do things work historically, what kind of regime might we be in now, what other regimes exist, how would that kind of work out to create forward-looking capital market assumptions. And then we look at long-term expected returns based on the current portfolio. To Ken's point, we brought a number of optional portfolios for the JRIP to consider and how the expected return might vary. One of the things JRIP member did bring up, and we helped emphasize through the work that your actuaries does, missing that long-term return just by 50 basis points leads to a much higher contribution, not next year, not 4 years from now, but 10 or 15 years from now becomes a compounding effect. So how do you make sure you achieve the return? Should we target something slightly higher? And then how does that then impact the annual volatility? We want to avoid a ton of volatility in contributions, but obviously with 60, 70% in equities, there's going to be volatility in the portfolio. So we do look at measures like annual volatility. We did stochastic simulations around different financial metrics, contributions, for example, funded stats.
I'm sure you guys do. I'm just saying, it seems like that's probably the stuff that speaks more to some of the questions that usually come up here and probably in front of y'all's board as well.
Without question. Look, Josh is here for a number of reasons. One of them is that these are questions that I get and I'm not really equipped to answer in any great detail. I'm really comfortable giving you guys a performance report and some high level answers. I don't know if, I don't think he came prepared to actually have a.
No, I know. I'm truly just saying that I think that the reason Jim asked his questions, the reason I've asked some of them is just because there's not much to glean from a performance report, usually one that's a quarter old too. So that's not a criticism, just saying, I think the reason you're getting the questions just because we can't ascertain it from there. I have another very basic question. So the assets in like the equity and fixed income, you said that, so are those publicly traded or are those like collective investment trusts? What do we own actually?
You own index funds. So the pension fund, a portion of the fund is allocated to collective stock funds. An investment structure that's open to retirement plans such as yourself. And then you also own ETFs.
A combination of them. Okay.
Yeah, exactly.
And how do you guys figure out how does the board get information about the collective trusts?
And that's a good question, because we had a lot of conversation about that when BlackRock brought it up. I'll let Josh talk more about the collective trust. But one of the decisions we made, and it was a lot of back and forth, I don't think anybody on the board, shame on me, because I was on the committee that selected BlackRock, but I don't want to get too, they gave us a very aggressive bid for their services. I'm very pleased with the fee we're paying for the kind of service we're getting from Josh and his team. It's in a world where there aren't too many values, I'm telling you, it's a good value. Part of that, to be frank, was because we were agreeing to use the collective trusts in place of the ETFs, which let's just assume somehow or another benefits BlackRock in some fashion. We ended up being a little bit uncomfortable with going totally collective trust, even though in 99.9% of the circumstances, they'll be just as liquid and just as easy to get in and out of as ETFs. But partially, probably simply because a lot of us just weren't totally familiar with the product, we ended up doing a blend. So we did, what was it, 2/3, 1/3? I forget now.
75% the collective funds.
75% collective and 25% ETF. And the reason we came up with that, and it was a group decision, was that we didn't see any scenario where we would be needing to access more than 25% of those assets, even if the markets had a really bad period. There was really no foreseeable situation where we'd be required to raise that kind of money in a short period of time. So we know the ETFs, we can go and get that money literally, next day. And the collective trust, if you actually read the documents, sometimes there's like a 2 or 3 day or 4 period.
Yeah.
Most likely, they're just gonna give you the money the next day, but they do have the right to delay it a couple of days
You said it's 75% collective trust, 25%
in each of the categories.
in each of the categories.
Right.
And so the difference is like, but the collective investment trust, it's like extremely low fees, huh? It's like
Yeah, so the.
0.05.
so that's part of the, proposition for collective funds. Our fees are negotiable, so they can be certainly lower than kind of an off-the-shelf ETF or shelf fund. So the,
But they're not, and just for everyone else, these are not SEC regulated, these are like banking and I guess ERISA.
see,
Yeah.
and, the index, right, the Russell 3000 index. $30 billion size fund. Investors are solely qualified retirement plans. There's actually a reason that the pension fund has the CTFs and OPEP is actually in 100% ETFs. OPEP are not eligible for these funds. The only kind of collection in the collective trust fund can be qualified retirement. And medical plans are not.
Okay. Thanks. Thank you.
That's a great question.
Anybody else? Mr. Stark?
Which of the private equity funds is now past its investment period?
So
The first two look like they are.
yeah, so I guess the first Lexington fund is a 2010. It's theoretically in its last year.
Yeah.
Usually private equity vehicles have 12-year fund life with an option for 2 to 3 extensions. Every private equity fund is going to do that extension if they don't think that they can sell off assets at the end of 12 years. So the Lexington fund, you'll notice that the NAV is down to 50-something thousand on an initial investment of $5 million. So that has been in liquidation mode. We expect the last distribution for that Lexington fund. The next vintage set of funds, 2013 vintage on Lexington fund, and another fund from Mesero. Both of those are, you're hitting the 12th year. They both are going to extend beyond, certainly from a NAV perspective. They've only really started to distribute for about the last year or two. And so we, again, expect over the next 2 or 3 years to collect the rest of capital from those investments. The rest of them are kind of in the early stages of the J curve. That's your Harbor Fund funds are pretty early on.
From Lexington Middle Market Fund 4 downward is.
Yeah, those 2017 funds, they're in the middle of their investment cycle. So they're making investments. The 2017 vintages, there's the Lexington 4 fund and the Mesero 7 fund, are both 2017 vintages. They're at about 7.5 or 8 years life now. This is when we'd expect to start seeing a pickup in distributions. They've made their investments kind of over the last 5 years. They called capital and moved in. There's still some room for them to both call capital, other investments they want to add into the fund. Usually the holding period for a lot of these funds for a specific investment be anywhere from 3 years up to 7 or 8 years. So you're nearing kind of the end of a long hold period that they might find an attractive investment that they'll find add value and be able to sell it.
I know some of this is sort of legacy, but we have a sense of what the optimal number of funds would be, because there's overhead expenses with each one of these. I'm just curious.
Yeah, so when you're allocating to private equity, there's a couple of metrics that kind of help dictate what you're going to do. One is your target allocation. So both the pension and the OPEP have 10% target allocations to private equity. So you might think about adding commitments to funds based on projected future cash flows so that percentage allocated to these private equity funds meets the 10% of your total portfolio. I think both pension and OPEP are slightly underallocated from a NAV perspective. I think the pension only just recently, with some stronger performance from some of the funds, just crossed that 10% allocation. So that's one is, what is my strategic target? I might need to make another commitment to add to that. The second thing is thinking about diversification. So there's 3 main types of private equity investments. There's primary investments. So that would be going, calling up Stone or KKR. They're raising investments themselves and you invest in that fund. There's secondaries. So somebody owns a Blackstone or a KKR fund and wants to get out and they want to sell it. That's generally attractive because you can buy it, 6-7 years into the investment. You don't have that initial J-curve investment period. And then the
You have the
third,
flexibility to do that.
so the Lexington and the Mesereau funds are specific funds. The Mesereau tends to be mostly primary funds. The Lexington tends to be a bit more secondary funds.
Oh.
Your Harbor Vest funds are a fund of fund that allocates to all three types. In the initial stages, Harbor Vest funds are predominantly co-investment, where Harbor Vest is making an investment and you're investing along with them. You also have secondaries in the Harbor Vest allocation, and they do have allocations to primaries that they're slowly rolling. So you're getting kind of all three flavors of private equity. And so thinking about future commitments to private equity, if that were to be something that Jay would want to consider, we would look at the underlying types of investments in all these private equity and make a determination if there's very little allocation to secondaries and it makes sense from a forward-looking timing of investing in private equity that we allocate to secondaries. We would look for a secondaries fund to add to the portfolio. Rather than saying we're just going to allocate to fund to fund or something like that. So that would be how you would want to consider it. And, we brought to the JRIP back in June as part of the private equity education was an initial pacing study. The pacing study is what you do to figure out how you want to make your allocations to private equity. It was more in a hypothetical of once we settle on a strategic asset allocation and review what this private equity target portfolio allocation should be, we would then re-up that study and kind of think about when new commitments might need to be paid to the private equity program.
Kevin? Go ahead, Jim.
We in the past, on our economy reports had that funded mutual funds. I thought we had that prior.
How much of that on the private equity?
No, percent funded.
Of the pension and of the OPEB.
But you're getting the same performance reports we get.
No, we can
We can add it.
we can add a funded ratio if that's something.
Yeah, if we could just add that, I think. Let's look at it.
Consider it done.
And then the other question is, at some point, because we've moved from a defined benefit contribution.
One fund. Employee. Town employees.
Employees.
Yeah.
Sorry, on the one fund. When does that fund start going down? Because people start retiring. Obviously, more and more people are going to start retiring. So, but at some point, the assets start going down, correct?
Yeah. I mean, that is typically what would happen. I think the current population, your actuary would be probably better.
Yeah,
Yeah.
maybe I'll talk with the actuary.
Talk about the
Probably,
demographics of
but-
when the peak.
It could eventually be zero
Yeah, exactly.
Yeah.
That's like 50 years from now or something like that. Because
after you and I
there's
are.
people just hired, still into the defined benefit.
No.
Up to a certain point.
Right, but
then
new
if that
hires,
changed, then all
yes,
the new hires-
exactly, right.
But there are people who still have 25, 30 years left in
Correct.
their career.
But it will self-liquidate at some point in the future.
Yeah.
And I'm sure the actuary could give us a
Okay, I'll talk to
better,
the actuary.
better answer. Yeah.
Appreciate it. Thank you.
There's another question.
Well, I was just gonna say if just since Josh is here, maybe like on page 8 on the alternative details, maybe you could just like talk a little bit around the metrics just for the benefit of everyone, like for example, on some of the really younger vintages, like the noise around the internal rate of return, like that, just to clarify what we're looking at.
Yeah, of course. So the table, very condensed and very small font, so I apologize for that, trying to throw as much data in here as possible, but I'll look at under the heading valuation date, as you're probably aware, private equity is priced daily. It doesn't usually price monthly, it's on a quarterly lag. So this is a September 30th report. We have private equity information as of June 30th. So what we'll look at is on the capital call, so how much of the initial commitment has been called by the private equity fund. So your older vintages are close to 100% called. The younger vintages, these newer Harbor Best funds are, between 10 and 30 or 40%. We do get an updated NAV. So what is the asset in what is the actual value of the private equity portfolio? So that's going to differ than your committed capital because there's some return that has been earned or at least unrealized on the capital that's been committed. Then there's two metrics, DPI and TVPI. DPI is distribution to paid in capital. So you can think of how much did we get paid back for investing into this fund? Obviously, the earlier vintages, the Harbor Best funds haven't made distributions. They're still trying to make investments. They're not going to distribute anything really to you. And so those DPIs are close to zero, whereas Lexington funds, the older ones, have been making a fund distributions. So think of that paid in $5 million, you have a DPI, let's say, of 2. That means you paid in 5, you got 10 back, would be the DPI. The TVPI, that's total value to paid in capital, adds together how much you've been distributed and how much still remains in the fund. You combine those, and you can think of the TVPI if you want to try and convert that into total return. You can think of the TVPI. Problem with both of these metrics, DPI, TVPI, there's no time value of money, so it just assumes.
TVPI is kind of the headline number.
Yeah, and so you're looking at the Lexington 2 fund. You got back a little bit under 2x your capital, but that's over 15 years. So that comes out to close to 5% total return, whereas a Mesero 6 fund that has 1.7x, but only over 12 years, the total return that you've realized has been higher. Sorry, that's the DPI, the 2.6x. That Mesero has been probably one of your stronger performing funds. Then the IRR is just determining. I have a NAV today. I look at all of my prior, how many times did I put in capital, and this is a bit more time value weighted, kind of gives you a sense of return on that total capital that you have invested. But it's not exactly a total return. It's more focused on just the timing of how you've paid and how you get to this total value that you've received. It's not exactly apples to apples to thinking about an equity return over that time or the public market return, but you can think of your IRR percentage as kind of being representative of how much did we overall return on how much we paid in.
But those IRR numbers, like the older ones, it's going to be a more relevant metric.
Yes,
But
exactly.
the really early ones where there hasn't been a lot of committed capital, it's sort of because it can be confusing if someone looks at it and doesn't.
Yeah, exactly. Because they can recognize something pretty early on and it bumps up the IRR because you have very small initial invested capital initially. So, take, for example, Harbor Best 21, 22, and 23, all returned capital to the system. They've recognized investments that they made early on in the fund. And so you get a nice big looking internal rate of return because you have these distributions. But overall, you also haven't put any money in. There's still a lot more time left in the fund's life. And so IRR in very short time horizon is a lot less informed than IRR, some of the longer vintages.
Thank you.
You promise you won't ask me that question. Next time I'm serious.
Anybody else have a question? Yeah. With this one? Thank you, gentlemen, for coming. We
Thank
really
you.
appreciate it.
I just want to repeat what I said at the beginning. We're very pleased with our relationship with that process. We really appreciate that. Thank you.
Thank you very much.
Thank you
So much.
Make sure to send Ken risk JRIP and see if there's something. Maybe I can join.
It doesn't have to fly here every time.
No, we have this as well.
Exactly.
Yeah, I won't leave your name.
Thank you. I appreciate it. Okay, you guys have a long meeting. So have a good night.
Okay, moving on to item number 5, to review the Board of Ed fiscal year 26 first quarter financial update. We have our Board of Ed interim CFO, Terry Mahoney there. You here, Terry? And of course, the superintendent. See you.
Good evening, how are you?
Just for the public's benefit, to back up on this, starts on page 18. So all yours.
Thank you. So as we close the first quarter, our overall financial position remains stable. Projected budget surplus of approximately $572,000. Well, this positive early indicator, several key expenditure categories, including special ed, substitute coverage, benefits, transportation, and utilities, require continued close monitoring throughout the year. Personnel services and fixed charges were projecting a combined surplus of approximately $682,000, primarily due to health insurance, largely a result of lower than expected enrollment at the start of the plan year, with participation expected to increase moderately in the second quarter. We will continue to monitor loss and fill rates, fluctuations in these areas. Based on limited third quarter activity, we're projecting a $280,000 deficit in the special education category. Variable influenced by factors such as placements, services, settlements, state excess costs. We'll continue to monitor these very closely. Full-base budget reserves and activities are on track to be fully utilized. Technology, software, and licensing runs show positive balances as IT continues to streamline subscriptions and reduce redundancy. Transportation is currently projecting a $320,000 shortfall. However, ongoing work on route efficiency and updating ridership data may help refine this outlook in the second quarter. Utility trends remain too early to assess with confidence, as winter weather will play a significant role in determining option costs. While early results are encouraging, we remain cautious as several major cost drivers could shift the year ahead. We'll continue to provide updated projections and a clearer picture at the end of the second.
Okay, thank you. Any questions? Mr. Walsh, I see your hand go.
Sure. 572 surplus for your entire budget.
Correct.
There's other numbers that go the other way, but that's factoring in all of that.
Correct.
Okay. And then you talked about health insurance having a $560,000 case surplus due to the lower anticipated enrollment start.
Right.
Are you talking about enrollment of the number of students or the number of employees?
Number of employees enrolled in our health plans, primarily the family coverages. People are more opting to single employee plus one rather than the family coverage. So,
Oh, okay.
yeah, so it's a combination of those two things.
Is that because we were hiring it? Salaries of lower at your request? I was on the board when I was in the negotiation. So we were trying to get younger.
We have
were not
strong relationships with our local college and universities for the last couple of years, particularly with Sacred Heart and a teacher residency program. But also, I think some of our more veteran teachers have older children that are no longer eligible to be on the plan as well. So I think
I was wondering whether that was going to happen because we were getting so many retirements for a while, for a year. Right? We were way off on the numbers.
yeah, they've stabilized again to as of November 1st, which is the date, as you remember, in the
Yep.
negotiations. And if teachers notified us prior to, they would be eligible for some small payout on sick days. I think we had 18 that had declared at last count.
Where if the numbers were on retirement well above what we then cleaned out older teachers, correct? Tell me if I'm wrong.
We did clean out.
Or we needed new teachers that were
Correct.
being brought in at a lesser salary that started their whole step process.
Yes, I mean, it's hard to say that every time a retiree leaves, that we hire a beginning teacher, especially when it comes to math, science, special education, speech language pathologists, school psychologists. A lot of those are coming in almost at an even swap. But I do think that as we have a more veteran staff, children are aging out for being eligible to be on the family plan.
Yeah.
And those,
So
as
you think
Terry,
that helps with what's been going on and why we have the surplus.
I think, and
Changes in the population.
that, and I think we do have a lot of spouses, you know,
both working in the districts, only one carries the insurance. There are some teachers and some administrators I've spoken to carry the insurance with their spouse that work in another district and may have a lower premium cost share, so there's a lot of that.
You might have asked, but normally we ask you at this meeting whether where the retirements came out, budgeted versus actual. Were they pretty much on track?
Pretty much
because of
on
the
track.
system
Yeah.
That we're using and
Yeah.
giving a benefit bills?
Yeah, I think last year we had everyone who declared by November first, I think all but one pulled back and ended up staying on for another year. So
So our budgeted numbers pretty much correct. for this
Yes.
coming year.
that was a great negotiating.
Good. And then on the special ed, we're not really gonna know where we stand, but.
September
Until-
30th was kind of early in the year to get an understanding, and I think Terry will say that.
Then the next time in January, February.
Yeah, we'll have a better number there based on where we are, what we projected with out of districts and settlements and tuitions and where we actually will be at that point in the school year.
Thank you.
Yes, Mr. Ruggiero.
For the medical benefits, do you have open enrollment? A lot of companies have open enrollment going on in November for the upcoming fiscal year. How does yours work?
So, teachers or new staff coming on in September has a period of time to elect. It's not really considered an open enrollment. Our open enrollment is in the spring.
Right.
But they do have a period of time to elect their coverage if they choose that. That's when they first come on board in September. So our big hiring push is at the beginning of the school year. They have within 30 days to select their benefits.
So what you have that impact in these numbers, correct?
To a certain extent, even though they may elect by September 30th, it doesn't necessarily go into effect right at September 30th. There's a little period of time. So really, the second quarter is a much better indicator.
So that's where you're saying that you could not see this full healthcare benefit sticking at 60?
Right.
But it
Throughout
shouldn't,
the
I mean,
year.
I wouldn't think that would be a drastic, because throughout the year, you're only gonna have changes, you've had a status change, a wedding or something, right?
Well, we do have a lot of staff turnover, particularly like in paraprofessionals in those areas where we're losing people and then hiring new folks.
So new hires and people leaving for
Or change of life.
change of life
Yes.
factor, like a wedding, death, etc.
Correct.
Is this just, because I don't know if this is, I don't know, good team. Is this as of the end of the first quarter, or is this current to today's?
No, it's just the end of the first
Okay.
quarter, September 30th.
Yeah, I have a question on, so this is page 20 of the PDF. The details for summary by major classifications. So in maintenance, operations, transportation, that utility contract, utility reserve. So we have the budget was $728,000. We're showing $194,000 surplus projected. I was looking at the detailed information that was provided to the Board of Ed, and from what I'm looking there, it looks like the 194 is actually in the budget. Like that is a budgeted reserve for utilities.
Correct. So the original budget was the 728. The contract is actually 533. So the board elected to leave that 194,000 in reserve. So last year we had to deficit in the deficit. So in case there was the need there to fund that shortfall.
Okay, but so like usually when I look at this, I think of the lines at the end as, okay, we're like, if there's a positive number, we're, oh, it's not gonna cost as much. But what I'm looking at in the detail is that there's actually, you have a line in your budget for the reserve. So this isn't an actual surplus. You've actually budgeted for this year for extra, just cushion in your utilities. Is that not, am I reading it wrong?
So the utility contract was originally budgeted for 728,000. The actual came in at 533. So there was $194,000 surplus at that point. But instead of cutting the budget or putting it in a different line, the board decided to keep that as a reserve for unanticipated electricity
So
deficits.
during the budget process, you would estimated 724 and change, but the actual contract you have is 533. So,
Right,
but when the budget was voted on, we approved the 728 number.
correct.
Okay, so I guess the question is why, because it's a utility contract that's bringing it down, and we kind of got into this last time. And I don't remember what the conclusion was, but it's a contract that's supposed to bring down our utilities. But we're still reserving like $200,000 almost, if,
Well, there's
Or-
two different things. There's usage and then there's the cost to purchase. So the cost to purchase has significantly increased. I think all of us can attest to our UI bills going up.
just in the
Then
okay, the
there's
rates.
the usage. So our usage has gone down 11%. So had we not had this in place, we would have been exponentially more in the deficit position. Because not only would you have had the same level of usage, but then you would have had your rates on top of it. So it's very, I understand how it can appear that it's not a full benefit of the contract, but I really think it is because we have the 11% usage down from the prior, from the base.
And I think the other thing we were thinking of is that there's 3 schools that were added online this summer with air conditioning.
Yeah.
In North Stratfield, Osborne Hill, and Fairfield Woods is now fully air conditioned. So I think that was why we were a little hesitant at that point to cut the budget.
Because you didn't know where rates were gonna go, but you were pretty sure that usage was gonna go down because of this big contract that you guys entered into.
Correct. It's been paying dividends, but we weren't sure because now the baseline changes from when we originally entered into the contract, adding these 3 new schools. With higher usage is going to be something that we couldn't really put our fingers on. We need a year's worth of data on how that's going to play out.
You want to ask a question about this?
I want to follow up on this question. I don't really fully understand this contract. I know you worked at the district prior to really well on.
Yes.
If we get you to develop some type of spreadsheet for us, so that we do it year by year, see whether it works.
We are actually, they are preparing a presentation to the Board of Education that we're going to have at an upcoming meeting. We haven't set the date yet. See what a change in board, and we can also have them come and present and questions at this board.
That'd be great. Maybe at our next quarterly, we have a better understanding. We've gone from a situation where we set the rate for each year, figure out what the usage was. That's how we went. Now this new system is a little bit all over the place. To me, I don't fully.
And we've asked them, and they're more than happy. They've offered on several occasions to come present to the board to show their impact and the value of their work to us here in Fairfield.
Is this something the town's looking at doing as well, on the town side, for all of our buildings?
There was some mention.
Considering some early conversations on if it's, if the Board of Ed had positive experience, then we should definitely look at savings on the town side.
Better understanding. So it'd be great if that company.
Synergistics?
Are they peer to like Johnson Controls?
No, I don't believe so. I don't know who their competition would be. I know that Milford as well as Hamden have used them and re-up tracks with them for renewals. And we spoke to both districts. Very favorable to the outcome, so that was one of their drive.
Well, let's just, for my benefit, again, refresh my recollection and people listening, just briefly, what's the concept behind the contract? What do they?
They don't save us their cost plus they write us a check for the difference. No risk.
And
So I would also anticipate and happy to see their presentation as well, because as a layperson, just as an educator, I'd like to know more about.
Yeah, I'd like to understand. It's, I'm not like,
I think we all gotta-
I'm trying to figure out what the concept. is.
Yeah, I think we all gotta understand it better. I think that's why I think we should get them to come, because it's just, it seems very complicated. And I don't know how they guarantee this every year. There's gotta be some actuarial thing that they put in here. But
Well, there is a someone on site that works with all of our buildings and all of our staff to ensure that we get utility savings,
I'd like to. hear the
which
presentation.
would be, we would not have the capacity to do what that individual does within the district.
Okay. Anybody else have any other questions? Mr. Mock?
can you address the transportation? Thought we kind of, I don't know, I kind of felt like we addressed that last time when we hit the budget and put a lot more money there, and we were gonna come back with a plan to try and bring it down. But what's still driving that cost?
I think it was early, we only had a month's worth of transportation invoices. Actually, probably less. Well, as of October 30th, we have gotten ridership numbers. We're working with our department's working with First Student to look at some consolidation and rerouting of routes where possible. We took some measures last year, for example, at the two high schools. Any student who the parking pass had to opt out of busing, so they couldn't carry both. So we reduced ridership there. Didn't have as much impact as we thought, but it did, I think, believe it reduced one full bus and a 3-tier to a 2-tier.
Who owns the analysis of deciding the right number of buses and routes? Like who does that fall under? What person in your?
It's a collaboration between First Student and our transportation department.
So who's who?
There's
runs the
a
transportation?
software program that you feed everything into. And then there's a lot of refinement by our transportation department, because they're the ones that really understand, the unsafe roads and all of those things.
So is there,
And then you have the special ed transportation, which is a moving target built into this as well. So we could have a child that, gets outplaced tomorrow in Stanford, and we have to transport them back and forth. So we pay for the route, we pay for the time, pay for the driver to go back to the yard. I mean, transportation is a driving force now, especially since they're all unionized Teamsters. Since COVID, their salaries, their benefits, everything has increased tremendously.
because I just don't think that First Student has a vested interest in trying to bring the cost down. But I wonder who is the person that actually works with, who's the transportation department? I don't even know that.
We
Yeah.
dictate
Yeah,
what the number of buses we want. It's really our call, isn't it, to a certain extent?
to some extent. I mean,
You enter to a contract, but then there's some flexibility.
yes.
So years ago, Jim, and you'll remember this, Jim, we had a guy named Mr. Ficky, remember him?
Yeah.
He used to come here, he was the head of transportation, and he would give us a presentation on what he was doing, and it was always kind of a highlight, right, Jim?
Somehow I got it right, but
Yeah. You got it right, but it was. So,
more of an art than a
We
science.
are looking, believe me, we're trying to, it's a problem. Because all the smaller, First Student is now owned by a larger company based out of Cincinnati, Ohio. My previous district, the local Long Island company was bought out by a conglomerate out in California. It's just, we're all being squeezed because we have to, by law, provide transportation to students.
but you think the 320 shortfall, it's really only based on about a month, right? Because they started school in August, So this, I don't want to jinx anything. This number should get better, you would think, right?
I anticipate it will get better.
And then the next quarterly meeting, it'll be worse. So,
The problem is that if someone's not riding the bus, the vast majority of the time, getting a parent to opt out is problematic. Because it's a safety net. For the days they need to use it, it's available to them. But we've all been behind buses here in town and wherever else you go, then you see very few students on it and it's frustrating. But for that one day that Johnny's gonna need a ride, Johnny gets the bus.
Johnny, she's a good voice.
Like, is there a time where like you guys cut it a little too tight and there's?
We actually, this year, to your point, we over-enrolled all our buses
Yep.
by a certain percentage.
Okay.
So that we know on any given day, there's a certain percentage of kids that will get a ride.
Yep.
And especially now in the winter months, you know, every elementary school that there's walkers and they're all walking to school, they're all getting dropped off. So it has helped, but just not enough. There's just not enough.
On that point, though, my kids went through the public schools and they're older now, but I don't ever remember a time when we were given an option to opt out of the busing.
or then.
So are the parents getting a letter? Like, what's the communication to say, hey, help this town save money. If you don't need the bus, let us know? Like, how does that communication work?
Mike sends about 6 texts to us parents every day.
We send out a lot of communications. No one can say we don't communicate with families.
Okay, all right.
But it's hard. I mean,
Okay, that's fine. I'm just curious about it.
Someone could technically opt out, but I think under the law, if they change their minds, you have to give them transportation.
correct.
Change.
No, I'm sorry, I'm slow because I'm pretty sure you've already covered this, like just mechanically, like how is it that it's over, how is it that there's a deficit? Like, you can track for X amount of buses, what happens that drives the number up? If you said it, I'm really sorry, I just not following this.
Well, we anticipate special ed transportation.
It's a special, okay, it's a special, okay, you said, okay, got it.
Any other questions? First quarter is pretty easy. It's harder. Second quarter, third quarter is always hard.
Third quarter's the hard one.
Yes.
It'll be 6 next time.
Well, we'll see you guys at budget time.
Yeah.
Yeah, it'll be here before you know it.
Welcome to the new
Can hardly
members.
wait.
Welcome back.
You bring donuts, then.
Bring donuts.
Gotta help us out.
That's all it's gonna take is donuts?
I know.
I'll even bring a box of donuts.
All right, thank you.
Thank
you. Move to item number 6 to review the town fiscal year 26 quarter financial update. We have our finance team here. Here's CFO. Ben Overall. I pronounced that right?
Overrule.
Overrule, I apologize. Director of Financial Planning, Analysis, and our controller, Tony Beagle. I'll turn it. And our first selectmen. Hello, everyone. And this starts on page knowledge 22. So I'll turn it over to you, Tom.
Sure.
Through all this.
I'm going to spend a few minutes just chatting about the finance department, at least the folks in the group who are primarily responsible for the accounting and reporting. And then just summarize what's in the memo that was circulated and address any questions. Right now, there are 6 positions in the quote unquote accounting piece of finance. There's myself, Controller Tony, the Director of Financial Planning and Analysis, Ben. We have a accounts payable coordinator, accounts payable, payroll coordinator, and a financial analyst. Except for the payroll individual, we all are new this year. So we've had, I began in January. Tony came on board a few weeks ago. Ben came on in the spring. The accounts payable coordinator is in her second week. And the financial analyst position is vacant. It has been vacant for much of the year.
Position.
The financial, it's basically the person who does the general accounting, does the accounting analysis, does the journal entries. That position was filled for about 2 months. The individual didn't work out. So that position is open. So we've had a lot of turnover, and we've got a few things going on. Obviously, wrapping up the quarter, and we're in the process of completing the audit. On the good news side, we did fill the director of risk management this week. So that individual is in his second day. So just a little bit of background in terms of the finance organization. And obviously, in addition to the finance organization, I am responsible for some other areas, but I spend a bulk of my time with finance. In terms of the report, I think it's kind of important to note that if you look at the budget and performance versus budget, for the most part, we talk about payroll a little bit. The items, revenue and expense items are not straight line. I mean, the payroll costs are the largest single component of the budget. They generally straight line except for when we have vacant positions and you have job classifications. But in terms of other revenue items such as taxes, which is the single largest revenue item, it's about 90% of the budget. That comes in on different times of the year. With the property taxes, 4 times a year. Other tax components are less frequent during the year. We have some large expenses that are, not on a straight line basis. Retirement contributions to retirement plans. They are basically twice a year. There's a bulk that comes in the first part of the year, and then there are some later in the year. In terms of insurance premiums, those are for the most part once a year. A chunk of those are in July. We also have revenues that come in from the state. Some of those are early in the year, some are end of the year. So when we go through when we talk about timing items, I mean, that's, those are the reasons why we have timing differences in terms of where we, think we're going to come out for the year. It's still kind of early, but at this point, there's a summary on page 4. And we believe that we will have about $2.6 million going to surplus. 2 million of that is in revenue, and 500,000 is expense savings, which we'll chat about in a bit. On the revenue side, taxes is a contributor there, and I think we're on the low end of the range for the estimate. We're guessing that based on the collection rate for the first quarter, we're going to come in around 800,000. That could be north of $1 million in terms of what goes to surplus. The other big contributor is building permits. They really, that group was very strong through last year, and they continue to be strong. Basically, there are a lot of projects that were identified during the budget process. We didn't know exactly when they were going to come in. A chunk of those have come in early in the year, but there are additional projects that will come in later in the year that will help drive the additional growth. I mean, there's a couple of projects there's a project at Brookline, and there's a big project at Aquarium. But there's a list of projects, but I think the other things that's driving the revenue, and I think I mentioned this at one of our previous meetings, is that the team has really become a lot more diligent in terms of getting documentation for the value of the projects that are being permitted. Because in the past, a lot of times, well, I don't know that it was a lot of times, but someone would come and apply for a permit, and basically they would make a verbal representation as to the value of the project. And now the team has began to require some kind of form of documentation, such as a contract from a contract. So, so that's a big factor. Sort of aligned with the permits, we have additional projected revenue in fire marshal fees related to permits. And then we're thinking that at this point, that in the golf area, we maybe ahead of budget a bit. Because I think there's some thought that there might be an increase in fees. On the, and then investment income, I mean, we've still got some work to do there, but the portfolio balance right now is about $30 million higher than the average balance that we had in the budget. In large part, due to the fact that we've had recent tax collections, and when we did the bonding, it was a bit higher than we've done in the past. I mean, that's obviously going to come down as we go through the year. Because those are funds that will be used to fund operations, and we have debt service payments coming up, and then capital projects. I think, you know, there is an analysis. Basically, I've calculated what the investment income would be for a full year based on the current value of the assets. But again, you know, that's going to come down. And I think as we get into the next quarter, we still are working on our cash flow projections. We want to get that kind of pulled together and incorporate that into the analysis. But right now, we're projecting about a $750,000 favorable variance. We've had some of that's also due to the fact that between the time that we did the budget and we got into the first of the year, we had a number of bonds that matured, and they were reinvested at a higher rate than the budgeted rate of 3.75%. I think most of the bonds that we have rolled over were invested in the 3.8, 3.9% range. The last bond that rolled over recently was at 3.5%. So that was a bit lower than what we have in the budget. So as we go forward, I think we're probably going to look to using something in the range of a 3.5%. On the negative side, we had about 1.1 million in the budget for traffic cameras. There's been a delay there. The budget assumed, I think that would roll out in the fall, September, October. Right now, we're guessing that could be sometimes in the spring. So that's a negative. So net of all of that is about a $2 million projected surplus in revenue. On the expense side, there's a schedule that has the vacancies.
Hang on, Tom.
Yes.
Let me ask questions.
Go ahead. Yeah, you can do the revenue.
You can do that. You can do that. Yeah.
Stop for a second. Go ahead, Jim.
So on the current and prior year levy and interest, how much is for prior year's levy out of the 800?
That's all current year. I'm sorry. No, there's a very small amount for the prior year. It's primarily the current year, and it's based on the difference in the collection rate. It was for the first quarter was like 99.2 versus 90. So it's primarily current.
The question, like, how high can it get collection rate? And I've noticed that other communities, other communities, probably like 8 or 10 of them have higher collection rates than we do, like down in Greenwich and other things like that. So I guess we'll just be pushing the envelope until we push it too far and go off a cliff. And 1 year when things don't go. Because it's, you know, every year I'm nervous
Every
about.
year we go up.
Every year I'm nervous about increasing it, but no matter how much we increase
Probably
it,
not.
there's a large surplus that comes the next year. So, all right, so you explained the building permits, and I understand the fire marshal fees are kind of commensurate with that as part of the approval process, and permit process. The Parks and Recreation, are you saying that 250 is based on what you are being told is going to be a fee increases to use our parks?
That is the largest portion of it. My understanding is there was a discussion about an increase. Well, two pieces to it. Basically, what Anthony did is he looked at sort of what he's projected activity to be in the golf area, and then he anticipates that there will be a rate increase.
For the next golf season, for the 26 golf season, there'll be a rate increase?
That's what he said this afternoon.
Is that built into the budget though?
No, this is over and above what was in the budget.
Was not in the budget.
I don't recall whether there was an increase in the budget, but this is over and above whatever.
Yeah, they would typically take into consideration a rate increase, but
In the budget.
in the budget, yeah, because all those permits and stuff come in the spring.
Okay.
So I would imagine that this is, I would have thought that that was primarily driven by increase. Not just the rate increase, because that would have been figured, but
Budget.
in the budget, but based on just traffic and volume.
He said this, again, I spoke to him, Ben and I spoke to him personally this afternoon. He said it's a combination of anticipated rate increases and projected.
And it could be rate increases exclusively at the driving range, because I know they budgeted it, I don't know, $8 in there. Now they're talking about charging 10 because there's a line. They're trying to balance the supply and demand.
I don't know if it was the driving range or he said it was a $1 to $2 increase, so maybe it was the driving range.
Right, Jim.
I'd be remiss if I didn't compliment you on at least giving us numbers this year for the first quarter as opposed to all zeros.
I was thinking about you as I was going through.
I appreciate that. I wanted to give you a compliment.
You also, I just gotta say, you should be complimented on the detail of this.
Yeah.
It's really good.
Well, it's a
Cherry picking
it's a team
numbers
effort.
by your meetings.
It's a team effort and direction from, it's a team effort all around.
It's Tony's work.
It's all your work. Thank you.
Giving it to Bo?
Go ahead, Jim.
So Tom, can you just explain to me the $750,000 interest income increase? You seem to be in a environment where interest rates are going down. And obviously things, bonds come up and how are we getting more interest off of what we predicted during budget season last year? Knowing, are you saying that you predicted rates to go down even more and
I mean, I think,
down as fast?
it is a little bit of a gamble going forward, but I think if we look at, through the first quarter, as we were going through the budget process, we assumed that, a couple things. One is we assumed that sort of the average balance was going to be a lot lower than it is. So the balance is really about $30 million higher than what we had in the budget. A chunk of that is in money market. Money markets right now, through the first quarter, we've gotten in the 4% plus range. So that's a lot higher than what we had in the budget.
Okay.
The bonds that matured during the first quarter, for the most part, were rolled over at a rate that was higher than the budget. They were, I guess 3.7 is what we had in the budget, except for the last one that matured. They all were reinvested at 3.8 or 9%. And I think, I still think that, we're going to have a fairly high balance, probably through the end of the year. And we'll pay up again, pay down, make debt payments. And we are going to have some drawdowns for operating. But a lot of that, I think right now is kind of built in through the first quarter.
Do you just mean more debt service than we budgeted?
No, I'm just talking use of the funds.
Okay.
No, it's just the use of the funds.
And then you explain the other, is that the whole 670, is that all the camera revenue you don't think you're gonna be getting?
Yeah, I mean, I think we assumed that it was going to be 1.1, so down 400,000. I mean, we assume we're going to get it, roughly 500,000.
What's the nature of the delay?
I think there's an approval process that hasn't been finalized yet. I think that's a few weeks away. And then I think
Approval by who?
it's the state, I guess, yeah, state, yeah. But once the approval process is done, then I guess there's concern about the weather. I mean, if there's bad weather, could be a delay in terms of installing the equipment. If the approval process is done, the weather's fine, and I think I think we're gonna look cautious here until we know.
We had the presentation on that a month or two ago. Knew it was gonna be delayed.
Yeah. The other thing is that we also know that this number is 1.1, very conservative number. Mr. Becker explained to us, so we could be making $2 million, and we might actually make the whole amount back by the time.
And there's some who, I'm a skeptic. I think some would say,
You look at the other communities that the Connecticut Post keeps writing about, they're getting like $1 million in a quarter.
I think it really depends on
This number may change.
Yeah,
since
I mean,
the
we have
second
we
one.
have an optimist here, but I think it depends on how quickly we can get it approved and implemented, installed, so.
It'll be fun to see when that gets implemented.
I'm
How much calls that'll come in on that. And I thank you for letting me know they won't be installed till at least the spring.
It's a possibility.
Early winter.
Driving pattern.
You know, there might be a setup to get you.
I know, I keep looking for 'em.
I think they have to put the signs
Sign
up,
up.
There's the sign up, so there's a third.
so they can't set us up.
So it's,
Trying to practice going past
Well, I'm doing
river.
the same thing.
Slow
Cause they
down.
pass Dwight every day. I'm like, and the pop's always sitting there.
Go ahead. I mean, got any more questions, Jim?
That's all I have on revenue. I appreciate it. Thank you.
Revenue question,
Yeah,
Shane? Go
I'll get it backwards. So just a question on the interest income and then the taxes. I guess with the taxes is quicker. So is there nothing in that line, you know, other than just collecting regular property taxes? Is there any other kind of like tax revenue we get that I'm just not thinking of that could push that up, or is it purely just collecting regular property taxes?
I mean, the thing that could push it up is if we have property sale for gas to taxes. I mean, but
Yeah, like a-
yeah, there are other things that can happen, but the thing that's gonna drive it the most is the tax levy. I mean, everything else is small relatively speaking.
So then on the, did you
Yeah,
have?
there's been other things in the past.
Yeah.
Like state revenue, they had extra areas, they give us a larger grant than we were anticipating, so they increased something that, you know, Caitlin Boss used to explain to us, because I was always wondering, like, how did that go up?
Yeah.
And so sometimes the state gives you more money, or the federal government gives you more money. In general areas that you'd get increases on, or if they didn't fully fund a program, put the money away.
But like when we're picking that number, it's pretty much just collecting regular. 'Cause I was remembering you said like maybe last year or something, you were like, if more people are escrowing their
That's on the
payments,
taxes, Yeah,
yeah, it's just like maybe that's just half,
it goes higher.
yeah. So on the, was that,
Yeah, I just wanted to talk about the other, it should be zero, but something happens like you just mentioned.
so on the interest income, just in terms of us estimating it, just trying to get like, I mean, I get that it's not gonna be possible to perfectly get it. So, you know, so one challenge is just, we don't exactly know what the average balance is gonna be all the time, right?
I think a part of doing the cash flow projections will help. We haven't completed those. So I think once that's done, that's gonna, you know, I think hopefully by the time we come back for the next quarterly review, we'll be in a position to say, hey, you know, this is where we are year to date, and these are the projections for the balance of the year. I think, you know, certainly on the operating side, you can, things like payroll, you know, as we look at capital projects, you know, yeah, so.
So there's that, there's, you know, the rate assumption. On this like detail that starts on page 36, you know, one of the things that we should probably get, and we just get it off an account statement, but we don't have the price here. So there's gonna be potentially more, and, you know, there's gonna be more income potentially coming in, right?
Yeah, but so we don't, the price would affect the fair market, the unrealized gain.
Yeah.
We don't include in the budget.
You don't include it in the
We don't
budget.
include in the budget.
So
I mean,
what
we
hap-
have it, we book it every,
Because we
book it, and then at the end of the year, it gets transferred to surplus. Hopefully it's surplus.
so it never, okay.
I guess at some point, there was a decision made to exclude unrealized gains and losses from the budget.
Because we're gonna always have that surplus every year. I mean, and maybe that's okay, but it's just, I think we should all be aware of that, we're always gonna
I
have.
think that we footnoted it in someplace.
There is a
Yeah,
footnote,
there-
the fair market value of unrealized gains is $393,000.
Okay, well, I mean, if everyone's okay with that, we're always.
I mean, I think it was a decision made with the board, I believe.
This- You guys remember that?
Oh, yeah, we talked about it at the last meeting.
Okay.
Yeah. Because we talked about making sure we don't spend it or use it.
Oh, no, I remember we talked about it last meeting. I'm just saying like for next year, is that the plan that we're gonna guarantee that we're gonna have a few $1 million of surplus in unrealized gain?
Well, there may not be.
Well, there may not be. Yeah, okay, fair enough, yeah. Okay. All right, that was it. Thank you.
All right, why don't you take us through expenses?
Again, the projected savings are based on vacancies, which are summarized on the vacancy report. Again, as I said, you know, there are large expenses that we don't really see any savings at this point in the year. But in terms of the vacancies, they relate primarily to the first selectman's office. We have a COO position that is open. We don't know. I don't know that there's a final decision. But right now, this assumes that it's open for the remainder of the year. We have vacancies in the HR department, with the director and the assistant director. The controller spot was open for a period, and we have other positions that have been open in finance. So those are the three larger areas where there are projected savings.
And the vacancy reports on page 10, right? Scenario, looking at that. Questions on this, on the,
Hand up.
Mr. Walsh?
Did you say that the COO position you have being listed here is the end of the year?
Yeah,
End of what year?
the fiscal year.
Fiscal year.
And then it may not.
It may not be. I
That
said
may
we don't-
change
yeah.
at this, we were waiting,
You explain that, Madam
For
First
the-
Select Woman?
we were waiting for the charter, because that was a charter question as well. I think that if it got voted down by the electorate, that would have informed decision-making. It's going to be posted, just for timing. Want to get some impact from department heads and finalize a job description. So realistically, it could be posted within the next month. Just historically, for filling some high level, the CFO position, HR director, in years past, the market has been challenging. I'm planning on posting this position, given what's happening right now with the special election. Also anticipating that might be, in terms of applicants, people may not necessarily want to apply for something that could be viewed in some municipalities as a political position until after February. And then when you just kind of roll, that's good too. That's really where it is. I mean, if we post it, I mean, this might change. Right now, my plan is to just get a good job description and post it. If we get a good candidate that comes forward, we'll hire that person. But just looking at some of the challenges that we've had in the past, don't want to be too.
I mean, I think that's the right thing to do. I don't know who would take a job. And then the chance that they're out of a job at some point.
I don't want to deter people too much because we might post it, but I'm just.
Job. Yeah, in this job market, it's not a great job market.
You're doing the right thing. That's what I'm saying.
That's,
Crazy.
So.
Mr. Myers, you have a
Thank you
question?
for that. I appreciate that.
Are we still on the department vacancy?
Sure, go ahead.
All right, so can I just ask about HR? Because, this is a major hole for this town right now. And I just worry because, those are the people that are gonna hire the people that we're looking to fill these vacancies. And not only that, there's a lot of people in the town who go to HR with their problems and there's nobody there to address their problems. So, who's not an HR director hiring an HR director? Who in this town is securing that we're gonna have an HR director?
Well, there is an individual there, a consultant, and he's very experienced. He's contracted through the end of this month. He's interviewing candidates, and I don't know if he's presented someone to you yet. But
The HR position has been posted. We, back in July, brought in, his name is Lee Palmer. He's an HR advisor, experience in municipal government, state government, over 50 years. He has been serving in essence as the HR director, very high level. We've had him come in and really focus on doing job descriptions, just basic policies and procedures across the town, which we're lacking, and will be posted on the website for employees. He's been helping with the search for that. In addition to HR, we have labor relations specialist who handles the collective bargaining. He did some reorg of the department to have more HR generalists who are just going to handle whatever just happens to come up from employees. We have a newly hired benefits manager. That was a hole. So some of the savings we're seeing in HR was that position was vacant for a number of months. it is filled now. We do have some potential applicants for the HR director. It is a priority. From the moment I filled this role, in terms of making sure that our department was welcoming to employees, served as a resource to our employees, and was tighter on some policies and procedures, just based on conversations I heard by attending your board meetings for some concerns within the department.
Because my concern is that, I mean, when we were listening to the audits that Connie did, there were a lot of payroll issues. And I'm still not really even sure where payroll lives in finance or if it lives in HR. And maybe you've decided on that, Tom, but, you know, and there's very complicated payroll that goes on in this town. And I don't even want to get into the system right now, but, you know, those are very sensitive, you know, cost issues that if we're not paying attention to those things, so.
How we doing with the payroll?
Yeah, I think we're in very good shape. I think we're in good shape right now. I think, the issues, that we had at the outset was, I don't think, honestly, we had the right people involved in the implementation, the migration process. I mean, finance was not involved. I mean, there's some very basic things that were not done, like dual processing. I mean, there was just basic stuff that wasn't done.
I think we all know that. So how we?
Yeah, so I think, what we did a couple of months ago is I was asked to be more involved, and Lee was asked to be more involved.
And Dave Kelly,
And
the
Dave
IT.
Kelly, we got IT involved, and basically I'd asked Dave to sort of be the point person to deal with Paycom. We had a meeting, we really identified some very specific issues that we had, and we sent a memo. We met with the first selectman, we sent a memo to the CEO of Paycom and his direct reports to 2 or 3 top level people. We sent out an email around 12 o'clock one day, and we got an immediate response about 3 o'clock in the afternoon. We had a call with them that Monday morning. They assigned some dedicated people to work through the issues. And we were having internally daily meetings to go over the issues. After this session, the initial call with Paycom, they assigned people to be on our calls. And now we're down to 2 meetings, 2 calls a week with them, and down to 2 or 3 relatively minor issues.
Do you think it's worth it now, the Paycom system? Still assessing.
I see, we still have some ways to, I mean, we don't have police and fire, not on the system. So, I think in terms of where we are now, the system that will work. And we need to continue to focus on internally, control kind of things that we've got to do. I mean, all of it wasn't Paycom's, there were some internal things that we should have addressed and solved, so.
I mean, Jim, I didn't mean to interrupt. When you said it's a system that will work, it's okay, but is it a system that will work to the town's benefit to make the whole payroll? Doing it easier for the
For
town?
what is done for the application now, yes. I don't know about police and fire. I think the objective is to get everyone onto the system. I believe it will.
And I think for time management, time and
Time management
attendance, that was an issue that I think that first started that conversation. I think it's having a positive
Jim,
impact.
did you have some more? I'm sorry.
I'm done. Thank you, Joe.
Do you have something, Craig? All right, go ahead, Jim Walsh.
So you said you need through the end of the year. You said at a meeting within the last 2 months, one of our meetings, we asked you about Paycom.
Right.
And you said you would know by the end of the year whether we can go forward with it, whether we're gonna have to fire them.
Correct.
And move forward with somebody else. So after this meeting or telephone call you had with the CEO of Paycom or his direct reports, you feel as though it's gonna solve all of our needs?
Well, no, this is a call that happened a couple of months ago. And I'm speaking to the progress that we've seen since then. What I'm saying is where we are today, there's been significant progress, and the things that we're dealing with are very minor. The only concern I have about is, whether this is something that's gonna work well for police and fire. We believe it will. But if you ask me today, what is my assessment in terms of going forward with Paycom based on where we are today, I would say, yeah, it works.
Can we get a report at who's ever gonna be the chairman, on our January? I want an answer on Paycom on January. Said we'd have one at the end of the year. And I'd like to know.
In terms of whether or not we're gonna be going forward with it for the town? Yes.
Also, whether police and fire are gonna be part of it, because when we were purchasing and Mr. Gerber was selling this town a new going private, taking this out of the town, where it, to me, seemed to have worked. I didn't hear a lot of complaints, but I'm not in town hall. I respect that. Mr. Gerber said, you're not in town hall. There's a lot of problems. I'm not in town hall, but respectfully, what we're getting, or at least seems to be getting without police and fire, is a partial solution. And I thought we were paying for a full solution. And if I want to know at that point in time, what amount of work the town's still going to have to do then? Or to me, a pretty big area of, what do you think, they have 400 or 500 employees? Police and fire?
No,
No.
The total town is, 500 plus. So, I mean, it's not the number, it's not so much the number of employees, it's the functionality of I don't know if it can do all of the things that police and fire needs it to do. I believe it can, but I don't know that we're gonna answer that by January.
We're not gonna answer that by.
The people aren't gonna get where you stand right now. Some people were getting 3 W-2s. Some people, employees were.
But I think that's resolved. I think, yeah.
With a paid service.
Oh, yeah.
And then having to go back to their paid service with another W-2 and then pay another time for their third W-2.
Yeah, but I'm not, yeah, that
We're
was,
saying that we appreciate that. That was a year ago, that there were problems a year ago, came in, changed the team, got the right people on the team that should have been like the IT director, because this is a information system. Got finance more heavily involved, daily meetings, had someone with HR. For police and fire right now, it's not there yet. Paycom knows that this is the next step. Like I think we're reaching the end of implementation.
yeah, I think
It took longer than we all thought it was going to. I think we're getting at the final steps on that, and now the next step for Paycom, they know that the end goal is to bring police and fire there. But police is using PAS, fire uses their own system for scheduling. And right now, information is going from those two systems into Munis and then into Paycom. Paycom knows that they need to really write a new program for us to make it go from police and fire systems right into Paycom with taking Munis out of the middle. But we're not there yet. And we're not going to be there by January. So I just want to set expectations for you in terms of where Paycom is and what they need to do on their end in order to make that happen.
I will say, based on the conversations we've had tonight, our town attorney should be looking at that contract and should be negotiating some type of fairly large credit back to us for their failures as a company, that you have to go to the CEO and his direct report. And we're in the position we are today. I mean, it's outrageous, to be honest.
yeah, so I would say, Jim, there were certainly things that they should have done better, but there were things we should have done better too. And I think that, there's blame to go around, but I do think Paycom should have done better. And I think they should have pointed out to us, the process that we used to migrate from Munis to Paycom was not a normal process. We don't have the right people involved. There's some basic things they didn't do, but we didn't do the things that we should have done. So, but I think in terms of, where we are now, I think we're in good shape. But I do think though, well, I know that Paycom has really sort of stepped up and realized that we were not happy or pleased, and they've committed resources to try and fix the issues as we presented to them.
Mr. Sherio.
I'm just trying to follow. You're saying you're gonna have a decision or be able to tell us by January if we're gonna go forward with them or not. But then you're saying that we're not gonna have the answer on fire and police, which was part of the Paycom solution. Those are contradictory statements, so I'm not following how that's.
Let me, what I was saying is that if the situation had improved, by the end of January, I would say we would make a decision to go to someone else. It doesn't mean that we would have, drop Paycom right then, because we would have had to go through a process of finding another vendor.
Certainly, I understand that, but with that and what Mr. Walsh just said, if they can't deliver on what they said, I would really hope they are gonna look at that contract. Because police and fire were part of that contract, were they not? It was a solution for all of our payroll.
I don't know if any, I don't recall if any.
Can we see it?
Yeah, sure.
You send it to us. I'd like to see what was incorporated in the contract.
I want to follow up on that question, and this may be an unfair question. Could you foresee us, because where I work, I know police and fire, very different than your regular employee. They do their payroll very well where I work. They have their own systems and so on and so forth, because there's a lot of overtime variations and so on and so forth. Do you foresee a situation where you would keep Paycom for the municipal employees, but not for police and fire? Is that a scenario? And if you think
Preferably
that,
not.
Preferably not. And I guess my question is, would that financially, would it be worth doing something like that? And you kind of answered my question, but my concern is you're gonna do that transition. You guys know this, I'm preaching to the choir. I think you do, Tom, that you gotta run many practice.
Oh, and that was part of the
We didn't
issue.
do that with Paycom.
We didn't do it, no.
That was part of the Paycom issue.
So I think what we would do is, we get to the end of the year and we say, hey, the pieces that we are working with Paycom on are working fine. Then we assess what needs to be done with police and fire. And if Paycom, we decide that they can't do that, then we may have to decide to go in a different direction.
Did I interrupt, Amy? Go ahead. I'm
No,
sorry.
I just wanted to ask you, because I missed what you said. You say that Bridgeport has Paycom?
No, they don't. What I was saying is that they do their payroll. They have dedicated people doing their payroll and they do it.
Like a payroll department.
Right. They have, unlike Fairfield, they have a payroll department with dedicated individuals. I think they use it through Munis too, but they have staff doing that, which we really don't. We used to years ago, right?
We used to.
I just missed the beginning of your statement. I wasn't sure if you were saying that, because you
It's
said.
very unique.
Effectively,
The police and fire payroll is just a different beast. That's.
Yes.
So
makes sense.
Can we also in January can you do the presentation? How much is this costing us with Paycom? How much would it cost add police and fire? We have no idea. I mean, we keep talking about this and we have no idea what services they're even performing, to be quite honest with you. But you said there's 500 employees. How many are police and fire? And like everybody,
Like 100
in their whole department.
Sometimes,
Yeah.
28.
100 and,
And that includes ECC too?
yes.
So that when you say police fire, you mean police fire and ECC?
Correct.
Okay.
But in terms of the cost, it's, the license is 150,000 a year.
Okay. Is there a monthly cost or a weekly cost?
That's an annual, there are some additional costs when we, went on to Paycom. We did not, register in a number of states. So we had to go back and fix some things that really should have been done at the outset. So that I think there's, $500 or $600 for the states that we've had to register in.
If you could just get some summary for us and how many employees that covers, how many it doesn't?
Following up on that as well, like, it's not clear to me the different modules of Paycom that we're using. You talked about time and attendance, you talked about actually cutting checks, the W-2. Like, it would be really good to know, like, what are the services that they're.
Yeah, and that's all going through Paycom, enrolling it in your benefits, naming your beneficiary, signing off on your paycheck. That's all people.
So from the town side, it's complete.
It's a comprehensive system.
Yeah.
If I heard what he said before, he said that why this is so inefficient is that you don't get the benefit of Paycom calculating the fire, But at the end of Munis, and the way we do it now, he has to still put it into Paycom, so it comes out of Paycom, right?
Right.
So it's like an extra step we have to do for police and fire because we're using Paycom for everybody. But we can't use Paycom to calculate the hours and come up with the actual number that it's gonna spit out from the
We can't
Paycom.
right now. The goal is to,
Figure that out.
that they can develop software or a program that does.
Right, so I would think that by January, you should be able to come back to us and at least know from Paycom programmers whether or not they think they can actually
I guess-
program our police and
I
fire.
guess what we want to do is before we try and address other issues with them, we want to make sure that all the things that we have open now are fixed. So we'll fix those and then we'll.
The town implement.
Finish them, and
Yeah.
they're using, police and fire using Paycom for accruals right now?
Yeah, they are gonna be using for this.
They can do part of it, just not all.
I mean,
Part of it is what
So-
police and fire need and for their systems.
And it's not just the payroll component, there's other benefits to using Paycom too, so. But I get it, and we'll look forward to hearing from you January-ish sometime. Anything else on the expense side here? Questions, Ellinger, questions?
Yeah, I'd like to go back to a point that Mr. Myers had brought up relative to the HR director vacancy. I'm more interested in the elimination of the assistant HR director. You don't see that too often these days where positions are eliminated. So I was just wondering what the thought process was behind that, how long we had that position, relatively new, because that's an expense saving that goes right to the bottom line.
Mr. Palmer, who came in just based on the needs of the department at that time. The assistant HR director was responsible for in large part for Paycom rollout and doing risk management. Thought that the funding in the department would be better used to just have generalists in the department. When we hire a new HR director who's here permanently, that person might have a different approach, but based on the needs of the department at this particular time, rather than hiring an assistant, thought that this was a better way to meet the needs of our employees and our town,
So it could come back in the next budget cycle. As an ask.
or stay.
And if I'm not mistaken, and I don't have the history that Mary had, she's gone, but Jim, you're our new historian. But I think this department, fire department used to have a risk manager, then that spot effectively went to the assistant HR director. And now then we were really exposed on the risk management side. Now we have a risk manager. So it dollars wise, it's a kind of an offset.
And the risk manager is in finance.
Okay, but at least
So, can you talk
responsible.
about that? Can you explain about the risk manager? Do they have experience in risk management? Is it municipal experience or is it just general risk management experience? Is the salary that person is getting now that you found somebody answer with what the number is in the budget? Or are we going to be seeing a variance one way or another now that you've hired this person? And is this person going to be doing what you guys had hired another risk manager who seemed to last about 6 weeks to 2 months, who was also going to be the deputy emergency management director, who had a car. Does this person get a car? Can we just kind of go over all this stuff and all the changes about the new risk manager?
The new risk manager is a risk manager. He is not going to be serving as the emergency management director. Chief Dunn is the emergency management director for the town. Deputy fire chief's case.
Does not have a car.
What?
Does not have a car.
And the risk manager does not have a car. He, I'm forgetting the worker compensation company that he came from. I forget the exact name of it, and was working for Kerma in the past, so has experience with risk management for municipalities.
New guy. You just
The new guy, the new guy that we just hired, not serving as an emergency
He's a
manager.
risk manager in the traditional sense of as a.
All of his entire business been in.
And
Well, that's all the Board of Finance asked for last budget
Yeah.
season.
He's a real risk manager.
That's what we,
And if-
that's what we funded.
And if you want to bring him before us and we can ask him questions, he'll probably end up quitting.
Well, he asked, I just asked if he should attend tonight. I says, no, you don't go.
Not tonight. Let him get like his feet wet for a while.
So, and then this person is no longer reporting.
He's not in HR, he's
HR.
Reports to me.
reporting.
That's where it should be.
Or
That's
should have
awesome.
been.
Some good news.
That's great.
So are you gonna leave
person.
this risk management department and just manage that department, or are you gonna fold that into finance?
It's, in finance, we have established a new department that we have labeled risk management. I think that's what we discussed at the last meeting when we made transfers. So we have a department that's called risk management. He also has the FOIA individuals will
So there's what?
FOIA.
Okay, so there's two people, is it
Yeah.
two?
There's not a new person. The FOIA individual was always there.
All right, okay. That makes,
So is they staying down there or coming under you?
Excuse me?
Oh, yeah.
It's reports to the risk manager, reports to me.
Okay, okay.
and you didn't mention Connie before in terms of your department.
Well, I said those, I mentioned the
New one.
accounting and reporting group.
Okay, thank you.
So
She's still there. I talked to her.
They're fine. So I was really addressing just the accounting piece.
We haven't scared her off yet. Go ahead, Mr. Wall.
Tom, in regards to your job responsibilities, during your presentation, you mentioned, obviously, you're, CFO, but you said you would cover other areas too. One of them that you already mentioned is you've been working on the pay comp stuff, correct?
Right.
Now you're gonna be getting responsibilities for the reporting of the risk manager, who also has the FOI person report.
Mhm.
Do you have any other responsibilities that have changed other than just direct CFO position?
Nothing that's changed. My other responsibilities are IT, purchasing, tax assessor, tax collection.
They all report to you?
Yes.
That's a change, correct?
No.
It's always been that.
Okay. And then another question, this I guess might be directed more towards the first select woman. Couple of months ago, when we were talking and we had the new chief, you had said that he was getting the same salary, but and I asked was it whether there was a contract. So for both chiefs of the police and fire, are there current existing contracts for each chief?
We're in the process of, the police chief's contract needs to go before the Board of Selectmen. So finalizing that with the town attorney within, hopefully the next month.
So it's been drafted, it's like everything's set.
Yeah, we're fine. It's got it today.
Does
That's,
the fire chief have a contract?
fire chief does not have a contract, but will also have a contract as well. Got a request from both the fire and police commission, and we're moving that forward.
Usually that's done as soon as they're in it, like,
Well, no, actually, I'm told that Bob Palomares didn't have a contract, approved contract for 3 years. And
wow. How did he stay?
I mean, that's,
Hey,
whether or not it was,
leaves the union and.
I don't know if it's true, but that was just, and I haven't verified that, but I think that it just took a while to get it finalized, but
That's the case, he was crazy.
Jerry,
Just two questions. When I asked that question a few months ago, you said it'd be about a month. So why is it now a month still?
contract. Just in the midst of other things going on with legal, just through the system and with HR. Sorry, it was not intentional.
And this is just a question on the numbers, Tom. I just want to make sure I'm reading this chart right. For finance, when I look at the finance line, for example, on the department vacancy chart, it shows that the salary for the year is 874. And then 25%, so the quarter would be 218. But then the way that it reads, it says that we spent for the quarter 278,000, so we would have spent more.
No, what we spent for the year included a payout for someone who left. So it includes other than regular salary. It included a comp time and accrued PTO for someone who left, for the controller who left.
Okay, so then, so the 64,000 that you're saying is, because you're saying you're gonna have a benefit of 64,000 for the year that we're anticipating. So that is taking into account, you had a one-time payment,
Right.
person that left, but you're gonna have more run rate in the second quarter that you're anticipating?
We have,
How are you coming up with that 60?
we have we have the staff position that's open. We're assuming that doesn't get filled for at least another month.
Hmm.
And we have savings from the time that the controller left to the time that Tony came on board. The accounts payable position was open, it's vacant for about a month, so there's a savings there. Am I missing?
So the six, that's my, I think that answers my question, because you're basically saying the 64, you had the one-time payment. That's, in
Offset.
there, that's why the number for the quarter looks like it's going the opposite direction, which it is. However, you have open spots
Right.
that are gonna give you true savings for the full year. So that's your run rate anticipated.
Right.
Okay. I just wanted to make sure I was thinking of that correct. Thank you.
Any other questions on expenses? Mr. Kerr.
Yeah, just working from the bottom up, just want to make sure I understand, we've got about $100,000 in potential savings on the fire and police lines, but we should, maybe in another schedule, but we should expect that that savings is offset by $100,000 of additional overtime being able to fill these vacancies effectively. Is that right?
That is correct.
Yes. Want to make sure I understood that. And then on the golf line, it looks like about a $60,000 anticipated savings. Is that related to the fall and that there were open or unspent dollars this fall, or is that expected to be a vacancy going forward?
Those are two vacancies that have been open since July 1st for the foreman as well as the laborer. They have yet to be filled. So those are two present savings that the golf course has seen.
And those are posted positions they expect to, or trying to fill them, or
I would assume so.
about to be the off season, so. Okay, thank you.
Okay, thank you. All right, thank you for your presentation. I think we can move on if everybody's ready.
Thank you.
Thank you, guys.
A lot of info here. Very nice to have all.
Really nice, good job. All right, I remember.
And I just want to say one thing, obviously, these numbers in this.
Correct.
Four, okay.
Like, I appreciate you trying to explain some of the numbers.
Not zero
I
though.
won't really.
I don't want to get shot.
Drill it.
I get shot again.
Not zero.
All right, so number 7 is discussion items for 2026, and I'm gonna just be upfront here. We thought that this was gonna be, we're gonna have new officers elected tonight. The future chairperson of this board, not gonna be paid. You were gonna have a discussion about this. So the first item is operational rules for the Board of Finance. I don't know if Mr. Curley wants to talk about that.
Yeah, sure.
Go ahead.
John. So I didn't expect that we would vote on any of this stuff tonight, which is why they're listed as discussion items. But last year in our organizational meeting, we did talk about some potential rules. The one that comes to mind was, did we want to try and cap meetings to end at 11 o'clock? And I think the general consensus last year was we didn't want to have a formal rule because we wanted to be able to go past if we so chose. And we didn't want to censor or short circuit someone's opportunity to ask questions in a meeting. And I think generally throughout 2025, this board did a pretty good job of trying to be respectful of the timeline and not go on too long. So I just wanted to put that out there for discussion to see, were we happy with how 2025 went or not, Jim?
I was one who, additional, because I've been on it for a while, did not want to limit conversation or amount of minutes somebody had to speak if you had legitimate questions to ask. But I will say, I thought it worked pretty well based on what we had to deal with. Meaning, and I had a number of conversations with our former chairwoman, who I think did a good job. But you cannot put 16 things on an agenda. I think we are gonna stop at 11. That would mean that we would short shift, and I would say half-ass everything to get to that point.
Yep.
And either we would need to have, and I'm not against it, maybe others are against it. I'm just telling you, I speak for myself. If we need to have more meetings, we have special meetings. If people really want to be here at 11. Otherwise, I think whoever's the chairman, it might be you, Craig, but whatever, whoever is chosen, gonna have to literally see, okay, this is a big item. I would anticipate this gonna go for an hour at least, and then start working your way through it, and then moving things up to, if the first selectman or whoever's coming to you and saying this stuff needs to be voted on, then you better be, if you really want to get out here at 11, there's ways to do it. It's just then put it on another night. But, to come here with sometimes, I think there was a couple times, there was 18 or 19 things on an agenda. Let's just admit, we're going to be here till after midnight.
Yeah, no, I agree.
And I know you're a realist about it, Greg, so I'm not going to beat a dead horse, but I'd like to see how it goes. I mean, I think we should all maybe give some thought. And I know sometimes I'm an offender that, I'll try to keep it direct. I try to ask questions late to give other people the opportunity to speak first. I don't like to even hear myself speak because I hear it all day long. But whatever. So that's where I feel.
I don't disagree with what you're saying. I think that, a year ago, when I brought this up, we had ridiculously long meetings. Last year was a little better, I think. I think they were still long. So, but I agree.
We had on our agenda.
I agree. I think, listen, this is me. And if anyone wants to chime in, we're volunteers. That doesn't mean we don't want to do a good job. We all want to do a good job, but we also have real jobs. And I don't know how many times we were here late, at least me, and let's be honest, the next day, it's like you're a zombie trying to work because you can't go to sleep, right away. So I have no issue with, we have to have a special meeting now and then. Let's have a special meeting. That's all.
I would just like to say that, there's also people that are presenting to us. We're asking them to be here. And look, and I've always felt like, they gotta go to work too. And these are our town employees, Anthony and I'm not saying, I'm just picking Anthony, but there's a lot of people and I feel like it's rough.
Yeah.
I mean,
We do that for Anthony. We do it on purpose.
Yeah. He's young, right?
Michelle Gore back there, the
But no,
yeah.
there's so many.
I get it.
I'm with so many.
And
Police, fire, it's just.
Yeah, so I think whoever the chair might be needs to work with Tom and make sure that the agendas are not long. And then if there's something time sensitive that requires a vote, then something else falls off and gets bumped to a special meeting. And
The next meeting.
yeah. Well,
Whatever,
yeah, if it's not time sensitive, then it can wait a month, but I certainly don't want to. I don't like adding special meetings as a regular occurrence. They truly need to be special, but I also think it's really important not to overload an agenda, just for the sake of avoiding a special.
I mean, even if the special meeting had to be 3 items or 4 items, then we did it by, WebEx.
We can always do WebEx.
Special meeting so that everybody didn't have to come back out a second time in the month.
Yeah.
Something like that. I don't know.
Amy, go ahead.
In the same spirit, with what Mr. Myers was saying, we have people that come here that, like the gentleman this evening, we don't want to shortchange them. They've made a huge effort to come here and we want to give them the respect and get our questions out. And, I think that's important as well. And I think that when you're putting the agenda together, if we could put it, I'm sure that, if we have people physically here or we know they're going to be on camera, kind of sorted that way so that the people in the room aren't sitting around for so long, particularly, anybody that's the town employees, Testani, Iris, whoever it is. I think we do try to consider or take consideration in that, but more maybe put the agenda in the order of importance. And I don't turn into a pumpkin at 11 o'clock, but some of us do. I'm not pointing to anybody, but.
I'm a night owl, so.
So am I. I'm up till 1, 2 in the morning.
Matter, but,
It doesn't matter to me.
but I do
But I
find.
have no problems with a special meeting. I really don't.
Okay.
I think it works out well for people.
Yeah, I'm same. I do turn into a pumpkin way before 11. So I'm happy with this.
I wasn't actually pointing to you.
No, I know. He's my mentor, so. I'm fine.
You're following his lead.
Um,
It's all in good spirit.
I see the time on this thing is 7,
so-
which I think is
Yeah,
fantastic.
so dovetails to the third discussion item, we'll just hop to it. If no one if everyone agrees we don't necessarily need formal rules, and I think we're all on the same page, we're good. Meeting calendar, I put together kind of a potential draft calendar for this upcoming year. It mimics what we did last year with the exception, and it excludes all special meetings. Because those will be ad hoc. But it does it does three things. One, it moves the meeting start time to 7 o'clock. I know we always started at 7:30 in deference to Mary because she had a tough time getting here before 7:30, before 7 or 4:07. I don't know if 7 o'clock works for you guys, but if it does.
I think it does. I think that's a great idea. It is one of the big problems with that, but I'm not gonna speak for everybody and what their schedule.
Oh, I think it's great too.
So I was just gonna say, I'm super in favor of it. And like, I would just even advocate for even a more aggressive early.
6:30?
6:30, well, we do.
Let's not push it.
No, that's.
We do some, I know we do some subcommittee meetings because I show up late to them. So 6:30, if any, I mean, do I hear a 6:45?
I think 7's fine.
Okay.
Let's start at 7. That gives us half.
I think 7 would be great. And I honestly, like during the budget meetings are the ones that typically have gone the longest. So I think as we're doing those, I don't know, did you build an extra budget meeting in here?
So I did not. This includes, it's a complete replica of what we did last year in terms of number of meetings. If I remember correctly, I think we actually canceled one of them.
I think 2 years ago we canceled one. I think we used them all.
Last year, we definitely used them all.
I think
We
what,
shifted some stuff and the HR, remember, we had to move
we-
that.
I think what happened
Funnel.
last year, we had the extra meeting, but we moved
Couple things.
a couple things for that meeting because the meetings were too long.
Revenue,
Right.
there was some shifts around because it got too late.
Right. The other thing that I did was, the budget vote last year, was on, let's see, Wednesday the 2nd. If we were to do that, this year, it would be on the 1st. I didn't move it for the sake of avoiding April Fool's Day for a budget, but I did move it up a day so that instead of having it Monday, Wednesday, it's Monday, Tuesday, simply because Passover starts on the 1st. And likewise, similarly, our budget, our regular meeting for April was on the 8th last year, and I pushed it out a week to avoid a conflict at the end of it.
Yeah, I think you need to do that.
So those are just kind of holiday movements, but what it's got to do is a couple of things. With respect to the vote, last year we did deliberation on a Monday, vote on Wednesday. We had like 48 hours. Now we're going to be pressed at 24. That's going to be tough.
That doesn't give time for a caucus.
Exactly. And
So that'd
so,
be my only concern there.
right.
We can't do Wednesday.
We got
but let-
Passover at
let-
sunset,
Let
right?
me throw one thing out in terms of the deliberation meeting. I think we kind of used that deliberation meeting to as our last meeting to kind of do cleanup discussions, like any open items that needed follow-up. It wasn't really deliberation. And Shane actually brought up a good idea in the sidebar. And he said, if there are caucuses can occur on the weekend before that deliberation meeting, you can actually come into the deliberation meeting kind of saying, hey, where are you guys falling out on these topics, and have a true deliberation where then the vote would actually be a fairly quick process. Something to consider. Did I?
Are we voting on that? We're not voting on this tonight. We're moving on.
There's all discussion items. Yeah.
This is something we could kind of take
Yeah,
off.
we'll
and think
vote
about
on
a
all
little bit.
three of these things.
I don't know. I think that, I mean, honestly, I think that we did meet on the weekend.
Yeah, we did.
We met on the weekend, and the year before, we met during the week, 2 days before.
So
Nice.
is Thursday, the April 4th? That would,
I don't care.
in April, you have a budget vote with blank, right? Is that the whole Passover?
Correct. I've actually moved the budget vote up a day to March 31st instead of April 1st.
So that would be struck.
So we
Because
did it,
April 1st is Passover.
but April 3rd, Passover wouldn't be.
Well, Passover goes from the 1st to the 9th.
Oh, okay. So we're trying to stay away from the whole week. I got you. I understand. Right.
Did I get that right?
Sorry,
Passover is the 1st and the 9th. 8 days. Isn't that how the song goes?
Dates off the top of my head. And I mean, I'm not particularly observant, but I think there's people who won't tune in.
Respectful to anybody public who, so.
So basically what we would have to do is we have the deliberation on the 30th and the budget vote on the 31st. And to the extent that we want to caucus, we'd have to do it that weekend, your
Yeah.
groups.
I think we would caucus on the weekend anyhow. That wouldn't.
Well,
Probably.
Probably.
Yeah.
I think it seems okay.
I
you guys
thought,
okay with that?
I thought the idea too, like, I think the last budget vote was really long, right? It was like, we were like out of one or something, right?
No, I don't think that was too bad.
At one point, Josh.
That's true. Yeah, you were concussed.
I was concussed. So just like that idea that March 30th meeting, maybe we just hash out all the discussion and maybe even, convince each other of something. And then the vote is actually just like,
The budget vote years ago used to be the shortest
yeah, I mean,
meeting of the budget session.
Right.
Remember that, Jim?
Yeah.
We'd be out in an hour and 15 minutes.
And I remember, Jim, if you remember last year, there were times when we were going to the budget vote last year where you were like, I might be inclined to support this if I know what you guys are thinking on this other item down the road. And those are all type of discussions we can have the night before. Like,
that's really what I wanted, because it's like you have, I think you guys had ideas of maybe where to come up with some money for, adding some to other budgets, and just how much we were going through that night. It wasn't really possible to digest it and even have a meaningful exchange. So
Yeah, we're gonna need that correction sheet earlier.
Yeah.
That we've been getting. We're gonna need it before the Saturday meeting. You really wanna vote. Tuesday, if we're really gonna deliberate on Monday,
No,
have that sheet sometime Wednesday or Thursday after our last.
And you're talking about the running list that.
All the pluses and minuses that we've talked about, errors we found or
Right.
new numbers we've gotten. We need that, we're gonna need that a little earlier.
Yeah.
We getting it.
You're gonna need it by Saturday, March
Before the-
28th.
We've never had it before, that
Yeah.
Saturday public meeting.
So,
Yeah.
I mean, we're not voting on this. We need to think about this. and-
Yeah, I mean, think about it a little bit more, but.
Well, but if you think about it though, I mean. We could add another budget meeting as well, and we could make it a special, so it's not scheduled, but. We're going in this Tuesday, Thursday pattern, but we do have from Tuesday, the 24th to Saturday for the public meeting. So there is that Thursday, the 26th that we could insert.
Something we had to.
So move it up basically all day.
Yeah.
I think that makes good sense.
All right, so maybe I'll just insert that and we can cancel it if we don't need it, but at least that way it's on the calendar.
The rest of this is pretty straightforward.
Yeah, so Ben, I can't remember, when did you start?
March 31st.
So basically right at the end of this process. So one of the things that Tom did for us throughout the deliberation, throughout the presentation in all of our meetings was the budget gets finalized and put to the the first selectman's office will put the budget forward, Board of Selectmen votes, and then from that point, you know, as time passes through our process, there are known changes along the way.
Yes.
And it's that change document that Mr. Walsh is talking about.
And I came in at the tail end of that. I am familiar with that and how that functions. So yes.
We'll just need that to almost be real time for us so that when we are at the point where we can deliberate, we'll know where the dust.
Any outs are that you've, yes.
And Tom, I do remember last year that I personally thought that asking questions in the PDF documents. I don't know if, Kevin, I don't know if you thought there was another way to do it, but.
Oh, we don't need to talk about it tonight. Go ahead, Jim.
So just from a timing standpoint, will the Board of Selectmen be presenting the budget before the special election?
No.
After. And the Board of Ed
Board of Ed will probably,
will have theirs presented before the special election?
They have to.
the Board of Ed will be.
They give that to you and then.
If they're out.
They have to get it.
Okay. So we're basically saying no matter who wins the election,
You gotta go.
Well,
this is not gonna change.
This is not, yeah.
Charter mandate.
This is the person
Yeah, we have to have a schedule.
Yeah, these are the.
coming in and putting together a budget and.
They're gonna have to adjust based on this. right?
Yeah, if it's,
It's not-
You want to put this to a
that's
vote?
good.
No.
We'll do it next
We'll do
meeting.
it all in December.
December.
But I think that's good feedback, so thank you. And then, the other thing that I had asked Tom to do is add this old business item, which you can go back to each reference. But that's a new idea.
The other thing too is just look at
Oh,
the
sorry.
committees, what committee you want to serve on. We can, I guess, email future chairman of the board. You can copy me to it about which committee you want to serve on. I'm gonna do the audit again because we lost 2 people on it.
Last year when we were on the budget subcommittee, we had really minor change.
Yeah.
We had changed it. I think it was about how we process questions, things like that, but and I'm not even sure if that's something that we're
I
going to
think-
continue to do. I know there was some pushback on how that was done, but
I
I'm not
think,
really sure, like, that was all we did. So I'm not sure if there's really, I'm not sure if that has a function, that subcommittee.
Yeah, we should discuss whether we're gonna push it a little further.
Maybe we just decide as a group.
I don't think our chairman was very happy with the turnout of that subcommittee.
historically, what happened in the
I was on it, so I could say that.
budget subcommittee, historically, what they would do is they would do a post-mortem of the budget process after the budget process to see what we can do better. Chris DeWitt was the chair of that for many years. And I mean, I think he came up with the idea of why are we inviting every single department to our budget meetings when there's no real change in their budget. We used to hear from the nonprofits all the time. So they did make changes like that. So maybe the way to look at it is whoever's on this committee, after we go through our process, you take a look at what happened and see what, if any, changes can be made to the process to be implemented the following.
All I would say is that I think he also made a lot of changes to the calendar and things like that. I think, I don't know how many times you can reinvent that wheel.
You're right.
So if it's
Yeah.
just this matter to have a committee,
Yeah.
that's great, but I
I
don't,
get it. I don't disagree with you. So
Well, I mean, there's certainly some committees that are more active or less active depending on the rhythm, right? Like, so if we make changes to senior disabled tax relief, it's gonna go 3 or 4 or 5 years before there's any substantive activity again, right?
Didn't we agree that we were only gonna look at it 2 years?
senior tax relief?
Yeah. Because the RTM was coming to us with thing every year. And unless we put it out there to have something done, it never gets even started with the RTM.
Yeah.
So I thought we had come to agreement. I thought it was.
Yeah, well, in my recollection, we actually did, we were active this past year. We came forward working with the senior disabled. He was the co-chair for the RTM, STDR. Anyway, and we had a minor change last year. We talked about a few, and then if I remember correctly, we actually talked about, all right, if we're gonna implement this change, do we want to revisit it again? I think the consensus was no.
Yeah.
But
That's why I saw that there. I'm like, do we need that?
Well,
Put people on the committee, but.
yeah, well, and similar to what Jim was just talking about on the budget piece and having it be really more active post-budget as a post-mortem, my feeling on this is we're likely not gonna implement any changes in time for the upcoming tax process, right? That, I think it typically starts in March. So my feeling is if we're gonna do it, do something substantive or potentially substantive in 2027, March of 27. The committee's got to be active in 26.
Okay.
So it's really, I wouldn't expect changes to occur for this upcoming tax cycle, but it would be active this year for the next cycle.
And that would be, correct me if I'm wrong, that would be getting us at least 3 years from the last substitute change, maybe even 4 years.
Yeah.
So maybe that's the time to start looking at it.
Yeah, and we have two new members who have point, so I
Move the asset level, 650 to 675.
That was
last year.
yeah,
That was a minor
And
change.
that's nothing tiny.
But you're still not getting.
Got rid of the freeze.
what's that?
And we
A
got
lot of people
fees.
participating.
Yeah, and I think that's something that
Up to like 750.
yeah,
probably.
we
That's what I
saw,
proposed.
Scratch the surface.
we saw enrollment kind of go down, right? Is it because people
Yeah.
moved? We
You
didn't
gotta
know
bring it
why,
up.
like.
Assets are up because the market. Can I?
Sure, go ahead.
So I just have a question. The purchasing policy subcommittee, policy's been issued. So what would that group do?
Yeah, well, so it's so weird because we, at one point, if you remember, the purchasing director, Adam Tublin, came in here, got his name right, and presented to us an amended purchasing policy.
Okay.
Did not have any red line track changes. We couldn't make sense of it. So subsequently, Lori had said, okay, well, let's have purchasing policy committee. Then me and Jim and Mary were on it. And I mean, at our last meeting, from my view, there's stuff there that we, like, just language that really needs to be just corrected. And the stuff that I kind of honed in on was just relating to conflicts with our ethics policy and the town charter's standard of conduct. There's language that is totally incompatible with it and confusing. And this is pretty basic stuff, but we should change the policy. And I'm just talking a couple of things, but there were other things. And I think we should just finish the job. And we just didn't have time.
It's like cleanup.
It's cleanup, but I mean, I don't know, Jim, if you have a different opinion, but I think there's, let's just get it over the line and present a clean.
I think he was looking for direction.
Direction, yeah.
And he just wanted feedback, so he wasn't just making decisions on his own. Then we can provide that.
I don't think
That
it's gonna
seems to make sense.
Yeah.
But I'm just gonna throw this out there. I mean, with the discussions we've had many times, it almost seems to me like it might be helpful to have a payroll subcommittee instead of some of these others that aren't necessarily gonna work like we don't do that with. Considering that you have some either implementation, it might be helpful to have some thoughts. And we did a lot with the loan and fund committee with policy. And it might be helpful to have a third, independent person as part of that. Because you're either gonna make some decisions to figure out how to get fire and police in there, or you're gonna be looking at a new company.
Big companies, they need to program. Right now, in the way the software currently exists, police and fire cannot get into that system the way that we want it to get.
Without system changes.
They need to make system changes.
So anyway, it's just a
That's-
thought. I was
that's-
throwing it out because the reason that the purchasing policy came up is I think we didn't have one. And there was a lot of problems, and that's why I believe,
Yeah, so I don't think there's any
Chris,
rule that says we can't add a
yeah,
committee or a subcommittee, but I agree with you. Audit is gonna be active.
extremely.
budget's gonna be, to your point, Jim, you can't reinvent the wheel, but if there are lessons learned, especially as we have new members and new ideas, we can do a debrief after that. So that can
Makes
be
good sense.
sort of
Yeah.
active. Fund balance, we just finished that policy, so I don't know that this would be an active committee. So that may be just kind of dormant for the year.
Yeah.
Purchasing, we can just do the finishing work and then that gets dormant maybe next year, right?
I think so. If all, the goal is just the policy, then it should be done soon.
Yeah. And then the senior and disabled tax relief, it's the work in advance of something.
I mean, I'm not trying to make work for any of us. We all have pretty big jobs to do. So I was just throwing that out there as a potential to have a partner, kind of somebody to help or a group of people to help, where you get some buy-in with the, payroll challenge that we've been discussing a lot. So it's just a thought.
All right, well, think what you want to do.
Our new chair can make the decision.
Whoever that's gonna be. All right, number 8. Oh, what is this?
Yeah, so, this is an idea that I had and asked Tom to put on the agenda and add some backup. Jim, you rightfully kind of pointed out over the last couple of meetings that there were some follow-ups that you were waiting for information on. And I wanted it to be more formal. So I thought, let's on every regular meeting, we'll have an old business section, and any follow-up items, we've got a piece of paper that shows it and we can discuss it and scratch it off and whatever. So that's what this is.
I thought you agreed at the last meeting that Tom was gonna send us something the next morning about what we saw as being the asks.
Sure.
I thought I would get that at the last meeting. And nothing ever came in, so-
I remember that.
Yeah.
And that's my recollection as well, and I think that's fine, but I think
This
that.
way, if I have listed something that I wanted that's not on the list, because Tom was busy writing something down and didn't fully put it on his list,
Sure.
we can just add it on temporaneously.
Yeah.
Track of it.
And that list would then be the backup.
Just send it to everybody.
Yeah.
Somebody sees something they requested and that's not on the list.
Yeah.
This way it doesn't just go into ether, because the only other way to get around it then is for us to all to rewatch the meeting again.
Right. And if I took accurate notes so far, the follow-up items from this meeting are, we're gonna get a status update on Paycom in the January meeting, but that's not a true follow-up, but
The cost of,
the cost of the Paycom contract, and then, town police fire split.
Yeah.
And actually, Amy, you asked for a copy of the Paycom contract itself. So I see 2 follow-up items.
We asked the Board of Ed to provide utility cost savings analysis. I don't know what form that's gonna take.
So they're gonna have their own Board of Ed presentation. I think what this time said is he a presentation, of course, it's something.
Yeah, and I think the natural time to do that is at the next quarterly meeting where they present, just make sure they know that that's.
The utilities contract.
On that, I should have mentioned this there. I was referring to something, but so the Board of Ed gets a more detailed backup. And I don't know why we're not getting the same thing. Like, so I was referencing a detailed backup that why wouldn't we get it? We should just ask them to provide that to us as well. It's kind of similar to what the town gives us. But so like if you go into the Board of Ed's meeting, they have this thing right here.
They used to give us that.
I don't know why it wasn't.
Lee, I don't know why they didn't
Yeah,
do.
we should just have all that stuff as well.
Yeah.
Because why would we see something different than
We
that?
used to get that in the quarterly.
You found that on the Board of Ed's agenda?
Yeah, so if you go to their, I don't know, like the 1028.
We didn't get one tonight.
It's just more detail. So it's like all the lines, you can see all the transfers. And so, for example, that utility contract, there's 2 lines there. There's a reserve and then there's the actual contract line, which is just not apparent from.
Yeah, they combined it.
Top level.
Yeah, okay, good. So Tom, did you want to take us through these follow-up items?
Yes, so the first one was a request to do an audit of the general liability claims in the Internal Service Fund. The internal auditor submitted the report and discussed the findings at the October 6th meeting.
Will the audit committee be bringing that to the board, or will she be presenting that, or?
She presented it.
She did.
Yeah.
That was to us? Oh, at the October
Yeah.
6th board for the. All right, good. Yeah.
We're all set with that.
I still provide a list of employees for the capital projects department and details of the expenses. That is included in the budget book. We didn't attach it, but we have copies we can provide tonight. So basically, we have the composition of the department is these, I mean, the individuals who are there now were the individuals who were in the budget. I think there are a couple of individuals who have been in there that have been transferred out. The grants was.
Grants manager.
Grants manager was in there. We did the transfer at the last meeting. But the professional individuals are still in there. So it's Eli and Beata, Sabrina, Beata.
Eli, Troy Deering, Beata Orson, and Joseph Parlanti.
So those are the positions that were in the budget.
And they are reporting to DPW.
Okay. Are there everybody who's in that department was in the budget from last year?
Correct.
Their salaries were correct in the budget last year.
Correct.
And then the grants person moved into the department.
Was in the department.
Time to full-time.
The grants job was in the department full-time budget, was transferred out to finance when we did the transfer last time. When she reported in the organization that reported to the COO. And so that was just a transfer from capital projects to finance.
So in the materials you supplied tonight for the quarter, I haven't gone down to detail level. I shouldn't see any variances then in that department, correct?
Correct.
Okay. All right, I'll take a look at it later.
What's next, Tom?
Include the internal service fund the quarterly. You do have a copy that's attached to the report.
Any changes in that, Tom?
Well, it's going to change. We have recently gotten an update from Aon for the incurred but not IBNR. And I think it's a fairly significant change. The approval last year was about $1.5 million. I think it's up to 2.5. And basically the explanation is that when we went from self-insured to full insured, a lot of people, the doctor, because of the changeover, right? It's a accrual is will be up significantly when we make the adjustment. We just got the estimate.
What's the reason people would go to the doctor if the insurance is basically the same?
I don't know. I don't know. Well, I mean, I think they're having questions about whether it's the same, and I think there may have been concerns. I don't know.
I don't know, but like sometimes when you change providers, certain providers are covered under one insurance plan.
I mean, I can't explain it, but that's the explanation we got. Is that
Could it be that they were trying to go to their doctor before they switched?
Yeah,
Yeah, just
uncertain. There's
or, you know,
some degree of
sometimes-
uncertainty.
Is there any, you can talk about it, any grievances about the switchover that we have to deal with? You can say yes, and then just.
There are some grievances over the change.
Okay.
Being that they're grievances, I don't want to speak too much about them.
The other change in the internal service fund is
Fire department.
Yeah.
No, I heard. I
It'll
think
be
Yeah, I mean, aside from.
Sure.
we're just in the process of finalizing the general liability accrual, and based on the analysis that we've done to this point, that will decrease by a couple $100,000. And basically what we do there is we take the open claims from the insurance company. We look at the estimated reserve that they believe is needed for individual claims. And we look at that reserve requirement compared to our deductible, the town's deductible, and we adjust the accrual based on that. So currently we think the accrual for the liability will decrease by a couple $100,000. But other than that, know the chief. Include the cost for, to fund demolished police vehicles in the annual budget. The current plan is to set up an account for within the police department to budget and track the cost of demolished vehicles, so it'll go into their budget. And, you know, we may pay it from the internal service line, which means that we'll make a transfer to the internal service line. So we can still address how we pay it, but we will have it budgeted within the operating budget.
You say demolished, it doesn't have to be fully totaled, right, for all damages or?
It's all. Evaluate the cost, benefit to fully self-insure PD vehicles or not. That's one of the tasks that the risk manager will be looking at.
That's an open item.
Yes. The cost, what is the cost of subscription service within the town-owned vehicle used by the former COO? We have not, still looking at it, but we have not identified any costs for subscription. We think, maybe there was a free period, I don't know, trial period. We haven't identified any.
Some of those devices, that answer, I saw that answer, it doesn't make sense because there's Cradle Point devices on there. That was one of the services listed, multiple ones of those. Those are modems. Each of the police cars has one on them as well. Someone is paying for that because the Cradle Point is a device that works as a modem that communicates through generally Verizon that you have broadband access in your vehicle, in that vehicle. A lot of, my company uses it for other things. That's what you do. There, you are charged a monthly fee because that's a fee with Verizon through the Cradle Point. Somebody is paying for that. Somebody was paying for that.
Right. Well, Connie's looking at it. She hasn't completed a review, but
Didn't we buy like a bunch of those Cradle things? I seem to remember running on like a lot of those things for the police.
Not that I know of. I know we were buying the radios and all sorts of other things, but I don't know. Maybe.
So this is an open item.
it's something she's gonna take
Connie Sachs was looking.
just to do additional work.
Because I know we have to pay, we have a bunch of these all over the place and it's on a per unit, per month basis. I don't know how else you would do it.
Maybe it's like Sirius XM. They give you a couple months
It's
free.
free, because if it's free, I'd like to have our
During Christmas every.
sign up for your stuff, get it for.
All right, Connie's looking at it.
Yeah. The next item is also, follow for Connie, request an audit of the maintenance and repair account.
Yeah, that's not what I asked for though. I mean, maybe it's just a typo. I asked for the fire department, not the police department.
I thought my notes said police, so that was my mistake.
No problem, Tom. It was based on these, that you handed out at the November 5th meeting, the backup.
Right.
Remember, we went over the 6 vehicles that they had and they were hitting all different departments.
They were splitting.
Oh, yeah.
The way they were splitting those costs up. So it was just and it might have just been a typo. So I just want to.
Make sure Connie's doing the
Fire
fire.
department.
She hasn't started the work, so.
And then my question I think I have for you is in your comment and response resolution. In order to properly do the budget, because some of these costs I think are improperly put in the wrong budget account for maintenance and care. We're gonna need this before we get the budget. So I don't know how you guys want to handle that internally, but they've really been budgeting that for years. I would anticipate the first select woman speaking to her department. Both departments are making sure that they're not gonna budget for that any longer. Therefore, I would expect that we're gonna be going down in those budget lines.
But I have had discussions with them. They are aware that they should not include it. I've spoken to both the police and the fire department.
Yeah, okay. So, I guess the third quarter would end March 31st, so getting it that late's not gonna help us. And I'm gonna have to.
It could be as early as.
It could be as early, no, I understand that. I just wanted to point out,
I understand.
that I'm asking for it is the budget's gonna be coming up.
I don't think we need to complete the audit to address the issue.
Yeah. Yeah, okay.
Then the final item I had on my list was the salary for the former chief and the acting chief.
And that's not really what I asked. What I want is, I want to know how much we were paid. I'd like to know the exact amount we were paying two chiefs at the same time.
Oh, it's in the, it's in the-
That's it.
30-24 to 9,
Yeah.
10-9.
Valerie.
It looks like 100, it's 166.
Full year.
Doubled up for the whole year.
We were paying him for a full year.
Yes.
So
Go ahead.
this brings me to a
I'm about
different
to
topic.
pass out.
So for one, we had some spirited conversation around the table about the car, $170,000 car, and there was a request for a complete audit of all pink slips. Any of these pink vouchers?
Yeah.
Which we did.
We
We did
did
the
that.
pink voucher.
And just looking further into some of that. So I mean, this topic that we're on now kind of ties to that, I guess, but anything being looked at with that? With other accounts that were touched, or, I mean, generally, as we discussed, you know, when there's something found, it's usually other things identified.
I mean, we're certainly aware of, what happened. We are looking at the process that was followed for one engagement. Specifically, in terms of how we made a decision to go to the new insurance consultant. Now, I don't know that we made a decision as to whether we want to rebid that or not. But we have had,
When you say the insurance consultant, what do you mean by that?
we had a consultant that we used, Assured. And we moved to Gallagher.
This is for the medical benefits?
It's for all of the liability, the risk.
Oh, self-funded.
General liability.
Yeah.
Liability.
So I think that's,
We recently moved?
Yeah.
Oh, so that just happened?
it happened right around the end of the year.
Who did we go with?
Gallagher.
Gallagher?
So are you saying that there's a question about how they were chosen, or at least something we need to look at?
Well, I think we're looking at whether it was in compliance with the purchasing policy.
So was it bid out? Do we do all that?
Yeah.
Do an RFP, all of those things?
So
So who signed that contract, Tom?
it was some of the first selectmen, the former first selectmen.
Okay. So
Sure.
Go ahead.
So we had a lot of changes that happened under our former COO. It wasn't just the insurance, it was where our funds were kept, it was the medical insurance, it was the entire way that the emergency management program was run. Lori and I, which I'm gonna forward to our next chair, have been getting constant requests. I know, John, you've had concerns with people reaching out directly that aren't shared with the full board. I have no problem sharing it. But Lori and I were getting a lot of emails for FOIA requests that weren't being answered with bank statements and genuine concerns of other things that may have existed. So I'd like to discuss that and let Connie look at those, or at least share them certainly with you or the full board. There was a lot of questions coming on this topic, and I haven't wanted to get into it too much, but we certainly need to look at it.
I mean, I don't know, the bank statements, I know there were requests for bank statements. And I think the statements were provided, I think, the situation I'm aware of is that the individual could not see the information on the bank statement that she thought was there. And it related to, and I don't want to waste a lot of time in the details.
Yeah.
But it related to tax collections that were being, there was online receipts, and those amounts were on a vendor statement. And what you could see on the bank statement was the total amount of deposit that was processed by the vendor, not the individual item on the bank statement, but you could see it on the vendor's report. And that was, some concern. But other than that, as far as I'm aware, every bank statement that was requested was provided.
Yeah, and there was bank statements for sure. I'll go back and I'll look, because the person has been pretty following up, and for whatever reason, I think she's been reaching out to Lori. I don't know if Lori discussed this with you at all, but I'll certainly share the info. I don't want to derail anything we're talking about here. I just was, wondering where we stood with that, because it has been a, conversation we've had. So,
Walsh?
Yeah, and on my request for the internal audit, I was talking about that. I had asked for more information, like whether there was pink vouchers, whether there was any pink vouchers for any of those cars, whether what the sticker price was versus the fit up, where the invoices were for, like, that's all not like listed here.
Yeah, I understood. I sort of condensed the response.
Okay, so we're gonna get that when we get the report.
Yes,
Right, because there's a lot of things going on. So like, I see all these cars that were purchased from ARPA money, purchased from different amounts of money. I'd also asked for questions on what the policy is in regards to the outside fire department, outside funds is, which I never even knew until this popped up on here, that we took money for some outside services for the fire department to pay for some of this vehicle costs. There is an outside services.
Yeah,
fund.
right, yeah.
Right.
I think they use I think they use a portion of the funds from the outside jobs fund.
Yeah, they use, I mean, at least, I'm just looking at the very first item on the Chevy Tahoe from 24, purchased last year. Capital outlay, fire outside services. So I said to you, I didn't even know I knew about the police outside services account. I never knew that we had a fire outside service account. What amounts are in there? What's the plan? We need to get to that level, like, because we're now hearing about accounts we never knew existed. I mean, we just didn't know.
I will double check on that.
So
There's an outside fire service.
I think there is, my recollection is that it's a part of the jobs fund. It's a very small portion of the jobs fund, but I'm not going to speculate. I want to confirm.
So the question I have that is $71,000. You call it fire outside services on this thing. Did the fire department have $71,000 even to do the withdrawal, or was that police funds? If you're gonna have outside services fund and you're gonna be buying police or fire vehicles from it, kind of have to know how that's done, and there should be a policy.
I'll double check that.
And then like, I'd like at the same time, like, there was two command vehicles at the same time. Chief McCarthy kept his command vehicle up until the day that he was no longer employed with us. Where did that go? Did that go? I presumed it went back into their fleet, but all these guys have brand new cars. All these top guys have these 6 brand new cars. Where did that command vehicle that was for a fire chief go to?
Second. Go ahead. What were you gonna say?
We'll have to check, but I don't think he had his command vehicle while he was on administrative leave. I think he might have had another vehicle.
You get back to us with?
Absolutely can.
Okay. And then I'm hearing, you had mentioned that I keep hearing different things. I heard that the Becker Batmobile went to the police department.
Hmm.
Now I'm hearing it's at the fire department. The fire department has it. Like, what are they doing with it? Are they painting? Is there more cost now that taxpayers have to pay for the fire department to use it? Because all their vehicles are red.
Was not aware that it was at the fire department.
Can we figure out
I-
what's going on
Who
with
did-
that?
Where did you hear this from?
Nobody wants, what I'm hearing about from both police and fire is nobody wants the car.
Well, then.
We should sell it.
That's different information than I have
All right.
received.
You at our next meeting, give us an update on what happened with.
The police commission voted, they requested the car go to the police department.
Where it is.
It is with the police department. And I will look in, if it's not with the police department, and if there was a transfer between those two departments.
You should know about it,
I agree with you.
right?
I agree with you.
The police commission then should know about it. They should have voted on transferring it, I guess. If they wanted it, they should be telling.
I'm not saying that it's with the fire department. My understanding that it's with the police department. If I am wrong,
All right. You'll get us a write-up on that,
I
or you want to present on our next meeting?
don't think, or I could just send you an email and just confirm where the car is.
Yeah, that's probably easier.
I mean-
because We hear a lot of things that
I
aren't.
mean,
true, so let's get
You know,
into-
if there's
I-
just like, it's hard to address things that aren't on the agenda and are
That's
just
fine.
things that were heard. I mean, I would have had,
Just.
happy to report, if there was a little advance
When
notice.
I depose somebody in a deposition and someone says, I heard that this said, my question is, well, who'd you hear that from? So who'd you hear that from?
When I depose people in positions, it's, have you ever
No. Who'd you-
in your life done the following? Okay? It's not like.
No, who did you hear
They
it from?
me.
Because you get this stuff all the time. I heard that Joe said he ran the traffic light. Well, who'd you hear that from? That's the question. So we should just get an answer to the question. That's all.
Yeah, we just.
Anyway, if we could just figure out, I'm just trying to figure out, because if it's in fire and then they got it, big F, I'm admitting, if they got another command vehicle back, where are all these cars going? It's like, we got 6 brand new ones last year. 6 brand new huge SUVs. We've never gotten that many SUVs in a given year, ever. It is, since, well, 20-something years that I've been on. And now all of a sudden we got 6. Plus, there's potentially, the chief had a command vehicle. Where did that go? If you can find out. And then what is the status of the Becker Batmobile? That's what I'd like to know. If you.
Emergency management vehicle.
Okay, well, is the emergency management director is the chief of the fire department. Does he have it now?
No, well, it is with the police department. My knowledge, if I am wrong, then that will be an issue, but the police commissioner requested, gave it to the police department, was with the 2 chiefs. The fire department did not need it. It went to the police department, not denying some of the, bad, mojo around it, but it's a vehicle and we have a need for it.
sage,
I mean,
It was good.
is it bad mojo? Bad juju. I mean,
Maybe the Board of Finance can.
I said it at the audit committee before you, I'm like, it's not a vehicle that police departments have.
well, it is now.
Well,
Wanted it.
I said it, that
I mean,
told it.
Commission wanted it.
the police commission wanted it.
It better be in the.
You just send us an email, an update on both there was a police chief's vehicle that was turned in by the fire. And
Yes.
2, what is the status of the infamous Becker vehicle? Okay,
Yes,
thank you.
my pleasure.
Anything else?
Going forward, Tom, as for any of these items that are closed, they can come off the list.
Okay.
Let's keep it just an open.
Okay.
All right. You want to move on to item 9? To hear and consider and act upon the draft minutes of November 5th. I will take a motion from someone. There we go, seconded by Mr. Crowley. Our 2 new members can't vote on this because you weren't here, so you should abstain. Any questions? Meetings?
I just wanted to make sure, Jim, you were comfortable with the underlined item of item 3 with respect to the conduits and infrastructure for future life. I want to make sure that language is accurate to what we want.
It's the italicized. That number. We got 2. Yeah, so it's item 3, go to the next page on top.
I think it's right.
I think it's correct. Thank you for asking.
Anything else?
I'm not,
Oh, boy.
I'm sorry. I
Go ahead. No,
couldn't
you're
speak
good.
during that meeting. I don't know that
I
liked you better.
I caught that disease.
It's gone from me to you and we're hoping we can,
that was a
during budget season. No.
I've suffered so much physically on this board. I don't think everybody understands like how much I have. So I don't know, and I don't know that Angelus and Jeff said that these fields are safer. And this is item 3. That Angelus, Papa George and Jeff Peterson are in favor of the field. They did. Did they really say that they're safer and easier to care for?
Yes.
Boy, I wouldn't want to be in the minutes of the meeting saying that, but
You're saying the care, you're not mowing the lawn and stuff.
safer.
I think they said that, I think I asked a question about, well, if you have a grass field that's used all the time, that gets ruts in it, these fields are actually safer. That was a response to my question.
Okay, all right.
And I asked them for their evidence.
Kids safe, not.
That will be, no,
Common sense.
I just,
What do you have to back that statement up? And they're like, none. I'm like, then why you mention it?
yeah, I mean, we don't have to read, this is about the minutes, so we'll just
All right.
move on.
Anything else? All right, all in favor? Aye. Members here, two of you guys abstained. Then the next matter is, consider next communications. Anybody, anything, Tom, from you? Select person, communications, anybody sitting over there? Any board members? Good job. Right. So your hand go up. Make a motion to adjourn.
Oh, yeah, I just realized that.
It's yours if you wanted to